Good morning, everyone. Welcome to IJU's Exam Prep IAS. This is Shyam Kagur here. Now, before I go forward, if there is no issue with the sound, can you give me a thumbs up? Thumbs up, yes, whatever you want to say. Great, thank you. So let me put in a nutshell what we discussed yesterday. Yesterday we started with taxation, right? That is already we had started with taxation. We continue with the concepts in the taxation. We discussed the concept of tax avoidance, tax evasion. Both under tax avoidance and evasion, objective is to reduce the taxation. But in avoidance, it is not illegal. Right? Government doesn't like it, but it is not illegal. But tax evasion is illegal. After that, we have discussed the concept of the minimum alternate tax (MAT), right, where government of India says 15% of book profit or 22% of the final profits. Based on that, we will collect whichever is higher. We'll collect in the form of taxation. Then we'll discuss concept of capital gains. What is capital gains? Under capital gains, you are buying an asset, selling an asset, and when you sell the asset, you have made certain gains, and on these gains, government will impose a tax and collect the tax. Now there are two types under that: long term and short term. And I've told you there is no fixed time frame from one asset to another asset. What is long term will change. What is short term will change. Right? So there is no fixed time frame. Then we'll discuss concept of countervailing, safeguarding, safeguard, and anti-dumping. Anti-dumping, whenever somebody says, okay. So anti-dumping, whenever there is a dumping activity, government in order to protect the domestic market will impose a duty or additional tax, which is called as the anti-dumping. Countervailing, to offset, to nullify the subsidy benefit that you are receiving as an exporter. Right? We will impose countervailing. And finally, safeguard. Whenever there is a sudden surge in the imports, that will harm, okay, that will basically affect, right, the domestic manufacturers. In order to protect the domestic manufacturers, right, basically, government will impose a tax which is called as a safeguarding. Apart from this, I've also connected certain current affairs concept there. That play, central government will play, right? Why the taxes are so important, etc. Then we started with indirect taxes. Under that, we have discussed the idea of VAT, cascading effect, input tax credit. And this is where we started the discussion, ended the discussion, albeit or basically except one point. That is the cost of transportation. Now, what is a cascading effect? Whenever we impose a tax on a tax, that is basically referred to as a cascading effect. Why there's a cascading effect earlier? Yeah, earlier we had central taxes which were different, state taxes which were different, and there was a cascading effect because what you pay to central government, state government will not give it back. Simple. If you're paying taxes to the central government, how can state government give it back to you? They will not give it back. It's very simple logic. So there's a cascading effect. That is the precise reason what all the states did was they introduced the concept of input tax credit, ITC, under the VAT system, value added taxation. But even under ITC, within the same state, whenever you manufactured and sold, cascading effect was not a problem. But whenever there was interstate trade and commerce, goods were manufactured in one state, consumed in another state, that led to a lot of cascading effect. Right? So in order to address that, we have implemented the concept of GST, goods and services tax. Goods and services tax, one will address cascading effect. Second, there were multiple indirect taxes at central as well as state level. We have subsumed all of them, right? But some of them are yet to be subsumed. I'll give you the names also. Wait. We have subsumed these particular taxes as well as cesses, right, to address or to make a system wherein we have one nation. Understand this? We have one nation, one tax. Remember, this is the punchline. One nation, one tax. And apart from this, some of the authors will also say one nation, one tax, one market or national market. Right? So there should not be any doubt regarding the term one nation. India, one tax. Right? That is indirect taxes will be subsumed into one tax. One market. Right? What do you mean by one market? The tax rate will remain the same. The tax rate will remain the same. So what do you mean by that? Imagine you manufacture this particular pen. You want to sell it in the state of Bihar. Let's say GST is 18%. Now, whether you want to sell it in Bihar, Karnataka, Uttar Pradesh, right, Punjab, Rajasthan, Gujarat, it doesn't matter. GST of 18% is applicable. GST will not change. It will be the same. That is national market or one market. Next, to widen the tax base. Tax base simply refers to the assets, revenues, or income on which government can impose and collect the taxes. So, whenever government has implemented these kind of measures, one of the impact has been to widen the tax base. In fact, under GST, there are more than a crore number of taxpayers now. Compared to earlier system, the number of taxpayers have actually widened or increased now. To make it easier to conduct the business. And finally, the transportation cost will add to the market prices or market cost. Now, before explaining, let me ask you a very simple question. Imagine you're manufacturing at point A and you want to sell it at point B. I'll repeat the statement here. Imagine you're manufactured in point A, that is place A, and you want to sell it at place B. A very simple question. Will the transportation cost have an impact on the market prices or not? Let me know. Will the transportation cost have an impact on the market prices or no? The answer is yes, sir, they will have an impact. Because if you're transporting, you will incur expenditure. And if your expenditure increases, market price increases. It should not be very difficult to connect all the dots like this. Now, earlier what used to happen is, imagine you're manufactured in one state, you are moving across another state. At the state border, there would be a checkpost. There will be a checkpost. Now, if a truck goes like this, before entering into the next state, they're supposed to stop, go to the checkpost, submit all the documentation, and then it will be allowed to enter into a second state. Now, what is the problem related to this? The problem is, whenever you are made to stop like this, one, you will not be able to cover more distance. Any problem, let me know related to this. Whenever you are made to stop like this, very often, the amount of distance that you can cover will come down. So, what time, how many days or how many hours can you take in providing the delivery of the goods? There is always a delay. You will take more than what is the time required. For example, imagine you are supposed to take 3 days to provide raw material. If there is no checkpost, no stoppages like this, you will take 3 days to provide raw material. But because of the checkpost like this, rather than 3 days, now you will take 4 days. Now, is it okay if I say that because of this, cost of transportation will increase? Because of this, cost of transportation will increase. Right, sir, why? Imagine you want to transport the raw material. You don't have the trucks. You will hire a truck. Now, rather than hiring for 3 days, you'll have to hire the truck for 4 days. And when you hire the truck for 4 days, what do you think will happen to the transportation cost? The cost of transportation increases, and as a result of this, market price also increases. So apart from delays in providing the goods or raw materials, now the cost of transportation is also increasing, which is going to add to your market prices. Now, do you want to increase the market prices because of this, or you want to reduce the market prices? Answer should be simple, right? You should be reducing the prices. There is a simple reason. There is a term called as logistics. What is logistics? Whenever, right, I hope I've discussed this. If not, understand this. Logistics simply refers to set of activities whenever you move a product from point A to point B. I will repeat the statement. What do you mean by logistics? Logistics refers to, right, basically movement, the kind of activities that you will take for moving a good from point A to point B. Imagine you want to transport this particular flask. That's right. You want to transport this particular flask. What kind of activities you will undertake? You will have to package the flask, package the bottle. Now you'll have to transport also. You will have to warehouse. You'll have to warehouse. So whenever you're going to undertake all of these activities, all of these put together is called as logistics. And if your cost of transportation is higher, what will happen to cost of logistics? Cost of logistics is also higher. And that has been one of the concerns. So have a look at this. Cost of transportation in India is higher because, right, the time taken at the checkpost is higher. There are many other official stoppages also. As a result of this, transportation cost increases, market price will increase. That will affect your exports as well as the consumer prices. Now what will happen under GST? Simple. We have eliminated checkpost. I have to understand this. What has happened under GST? We have eliminated the checkpost. So is it okay if I say now the implementation of GST has addressed to a certain extent, not completely, to a certain extent, the cost of logistics? Right, I'll repeat the statement here. The implementation of GST to a certain extent has addressed the issue related to logistics cost. Now let me go to the features of GST. What are the features of GST? First one, under GST, we want to streamline or subsume the indirect taxes. It should be pretty clear by now. We have been discussing the same thing again and again. One nation, one tax, and one market. Second, to implement GST, we made an amendment in the Constitution of India. What do you mean by amendment? Change in the Constitution of India. What was the reason here? Simple. Here is the central government, here is the state government. As per the Constitution of India, right? As per the Constitution of India, central government is supposed to impose and collect a service tax. As per the Constitution of India, the central government is supposed to impose and collect the service tax. And what about the state taxes? States are given the right to impose and collect VAT. Now we want to implement GST. I'll repeat the statement here. We want to implement GST. And we are going to subsume. Subsume means include service tax as well as VAT. Now follow the next statement very carefully. Because under the Constitution, they are given powers like this. If I take away their powers without amending, changing the Constitution, that is violation of the Constitution. That is the precise reason. What we did was, we amended the Constitution first, then introduced the idea of GST or the system of GST, Goods and Services Tax. That is second very important point. Third, we have set up a constitutional body under Article 279A. The name of the authority is GST Council. Very, very important. I'll repeat. We have set up a constitutional authority under GST. The name of the authority is GST Council. What is the GST Council? The GST Council is an authority set up by President of India. And it will be chaired. Chaired means it will be headed by the Finance Minister of the central government. Right, I'll repeat the statement here. Right, it will be headed by the Finance Minister of the central government. Somebody is saying, sir, in the PPT, isn't it 102 CAP? Please understand, one is a Constitutional Amendment Act. Another one is a Constitutional Amendment Bill. What I have written is Constitutional Amendment Bill, not a Constitutional Amendment Act. It should be pretty clear to you. Those who have studied polity, it should be clear to you. Please, right, be very careful when I'm writing these particular things. I'm not a polity faculty, but I know a little bit of polity also. So it is not an act, it is a bill. Right, whatever, 100, 101, you know it better, you have a look at it. To others whose polity classes are not over, please don't panic. Please don't panic. So you have not discussed bill and act. That will be discussed under the polity classes. Please don't worry about it. So the chairperson of this particular council will be the Union Finance Minister. But apart from Union Finance Minister, is it the only person from the central government who is present in the GST Council? No. Apart from the Union Finance Minister, the state Minister of State, right? The Minister of State or in the Ministry of Finance can also be present. She is also a member of the GST Council. So from the central government, this is the representative. What about the state governments? Right? What about the state government? The state government, all the revenue ministers or the finance ministers of the state governments will be present here. Is it the only state governments? What about union territories? All the union territories which have legislature, example Pondicherry, the revenue ministers or the finance ministers will also be members. So central government plus state government members are present. Now what is the role of these particular council? What is the role? What are they supposed to do? Right? They're supposed to take any decision regarding GST. So what do you mean by this? Whether to include the flask in the GST or not. If it is included, what should be the rate of GST? Right now, let's say GST rate is 28%. Should it be 28? Should we reduce it to 18? Everything related to GST comes under the purview of the GST Council. It is the council which shall take the decision in the GST Council. Done? Now, apart from this, there is also a concept of voting power. There is also the idea of voting power. What is this voting power? We already know that in the council, there is a central government presence and the state government present. Now, if they start voting, what do you mean by voting? Let's start with an example here. Imagine this is a product which is covered under GST. There are more than 1,000 products. I'll show you the current affairs data. Please don't worry. Right now, the GST rate is 18%. Now, there is a discussion. Okay, there is, right, the discussion here. Should we increase the GST rate from 18% to 28%? Now, in that particular discussion, right, some of the states will say, no, let's not increase it. Some will say, let's keep it the same, let's increase it, etc., etc., etc. Now, then what is the decision of the council? What should be the decision of the council? That is where the voting weightage will come into picture. Now, for any decision in the council to be taken, you need a majority of 75%. I will repeat the statement. When everybody will vote in the council, we'll simply say 100% voting is done. But if you want to take a decision in the council, you need at least 75% majority. But is the voting power of the center and state equal here? No. Central government is given the voting weight of 1/3. The central government will have voting weightage of 1/3. That is 33.33%. 33.33%. Again, don't say sir, only 2 threes. It should be multiple threes, etc. 1/3. And all the states put together, right? We have 2/3 of the voting weightage. Is it okay? Right? Remaining 66.6666. Right? Put a bar above or right? End it with 7 like this. Don't worry. Right? Remember 2/3. Now, when I say all the states put together, it is 2/3. Sir, will all the states have equal voting power or different voting power? All the states are given equal voting power. That is irrespective of size, shape, which party, what is the contribution, doesn't matter. All the states have equal voting right in this particular group. So when we will vote, you are supposed to have at least 75% of the majority of the votes so that the decision can be passed. Right? This is how the decisions, and please be very careful here. It is not just 75% of the majority, it is 75% of majority of present and voting. P and V, meaning what? Some of the states members might remain absent, so forget about them. Whoever is present, let them vote. And you should have at least 75% of the votes in one side. Then finally, the quorum of the GST council is 50% of the members. Okay, quorum of the council is 50% of the members. What do you mean by quorum here? Quorum simply means, imagine there is a meeting supposed to be held. Some people will remain absent, remaining will come. So how many minimum members in the council should be present to start the discussion? Is okay. Quorum simply means what is right 50% of the total membership. That 50% plus should be present so that the discussions can be started. Right? That is the basic idea of a quorum. So this is the importance regarding the idea of a GST council. Now don't enter into all these calculations, etc., etc. UPSC will not ask you this. Right? Why? It has been 5 years. It has been 5 years since implementation of GST. If they wanted to ask, they could have asked the calculations many years ago itself. So don't run into, sir, how do we calculate each state's voting weightage, etc., etc. You can do that, but it is of no consequence for UPSC. Done? Right? So this is the GST council. Next important features: dual GST and integrated GST. Dual GST and integrated GST. Now, what do you mean by dual GST? Whenever you use the term GST, there are two components in GST. Understand the statement carefully. Whenever you say GST, there are two components in the GST. One is central GST, second one is a state GST. So what do you mean by this? Have a look at the last line under the same point. GST slabs. Now you start writing, sir, slab means what? Slab means rates. Simple. Slab means rate. How many types of rates do we have under GST? The most important slabs are 5%, 12%, 18 and 28%. 5, 12, 18 and 28%. This is the rate. Now understand this very carefully. Very carefully. Don't get confused here. Whenever the good is manufactured and consumed in the same state, that is interstate. Interstate, not interstate, intrastate. I'll write that also. Whenever the good is manufactured and consumed in the same state, that is intrastate, we simply use GST. We simply use the term GST, goods and services tax. Second, whenever the good is manufactured in one state, consumed in another state, that is interstate, we use integrated GST. I'll repeat the statement here, don't get confused. Rates do not change. For example, right, let me start with an example. This is a bottle. 18% is the tax rate. Whether it is produced and consumed in the same state or produced and consumed across a different state, rate does not change. We have discussed this. Rate does not change. Now you'll ask, sir, if the rate does not change, why do we have two names like this? One is a GST, second one is an integrated GST. Why two different names? Reason is that GST is a destination-based tax. GST is a destination-based tax or consumption-based tax. What do you mean by destination-based tax? The tax is collected in the state where the consumption happens. I'll repeat the statement here. The tax is collected in the state where the consumption happens. So what do you mean by this? Let's go back, rewind the clock a bit. Yesterday's class, we have discussed the central sales tax, CST, central sales tax. Now in case of central sales tax, let me ask you a question. If a good is produced in S1, consumed in S2, which state will collect the central sales tax? Start answering. If a good is produced right in S1 and consumed in S2, which state will get the central sales tax? Which state will get? Like many of you are writing central government. Central government has the right, but it will simply tell the state you collect it. Central government will announce it because they have the right, but they will tell the state you collect it. Or many of you have already forgotten. Somebody is saying both. Arey Baba, where are you reading? I'm concerned now. It is a state one. You people have already forgotten. Great. It is a state one. Please revise. Please go back, have a look at the PPTs. At least yesterday's PPTs you understand. It is a state one. Why? I gave you this particular term. Central sales tax is origin-based taxation. Is origin-based taxation. That is the state where the product originates. So from where the product will come, that state will get the right, that CST. Sorry, you have not discussed. Please go back, have a look at the PPT. You will realize all the terms are there. I only have written, by the way. Right. So understand this. Whenever you talk about interstate and intrastate, GST, by the way, both of them, it is a destination-based tax. Meaning what? The state where consumption happens, it is that state which will collect the tax. In that state, the tax will be collected. How? Just give me some time. I'll show you the calculations also. Not required, but I'll prove that. Just give me some time. But why are we using two terms here? Because we need to find out which state is getting the GST component. Which state is getting the GST component? Because just go back here a couple of minutes ago, I said there are two components in the GST. That is, if you write either GST or IGST, doesn't matter. Right? There will be two components. That is CGST, central GST, and SGST, state GST. And SGST, state GST. CGST will go to central government. There should not be any doubt regarding the CGST because there is only one central government in India. What about this SGST? SGST will go to the state where the consumption has happened. I'll repeat it. SGST will go to the state government where the consumption has happened. That is the rule here. And now understand the logic here. Whenever it is intrastate, what do you mean? Good is produced and consumed in the same state. So is there any problem in deciding who will get SGST there? I'll give you an example so that you understand. Imagine state 1 is there. In the state 1, production happens and consumption also happens. That is intrastate, by the way. Is there any problem in this to identify which state should get SGST component? Let me know. Any problem here? No, there is no problem because the consumption is happening in the same state. No problem. But what if I say, in the second case, production happens in S1, consumption of the good happens in S2. Now tell me, under GST, which is a destination-based tax, which state should collect the SGST component? Very simple, it should be S2. And that is the precise reason. In case of intrastate, we simply use the term GST. In interstate, we use the term IGST. Beyond this, there is no significance. What is the right, basic inference here? If they say GST, state collection GST is this much, it is intrastate. If they say because of IGST, the state has collected this much, it is interstate. And that is the inference that you need to derive. But apart from this, nothing else will change. I told you, if the flask is being taxed at 18%, whether it is consumed in the same state or sold across the states, doesn't matter. It will remain 18%. Let me go to the next point. What do you mean by dual GST? I said there are two components, CGST and SGST. The SGST and CGST will be equal. I'll repeat the statement here. CGST and SGST are same, equal. 18%, simple CSAT calculation, do it. Divide 18% into two equal parts. Let me know what is the answer. Divide 18% into two equal parts. Thanks a lot. 9%, 9%. If I say 28%, divide that into two equal parts. 14% and 14%. The 14% will be given to central government. This 14% will be given to state government. So what if it is 5%? 2.5, 2.5. Now don't ask, sir, what if it is 0%? Can you divide 0 into two equal parts? Again, it will be 0 and 0. Because generally you try to find exceptions or the problems in this. I don't try to divide 0. Right? So 14, 14. 9, 9. If it is 12, 6 and 6. Simple logic. Divide that into two equal parts. Give one part to central government. Give the other part to the state where consumption has happened. Where consumption has taken place. Now there are certain goods which are exempted. Exempted means these are not covered under GST. There is no GST on this as of now. For example, alcoholic liquor for human consumption. Why? Why it is not covered under GST? Simple. Please go back. In the first class, we have discussed certain concept related to alcohol. The states collect a lot of their tax revenue by imposing duties on alcohol. Now, if you bring it under GST, there is a division of the revenue. States don't want it. States are opposed to the idea of bringing alcohol under the ambit of GST. So, if there is no GST rate on alcohol as of now. It is not even covered under the ambit of GST. The GST Council will decide when to impose the taxes on fuels. The council will decide. As of now, we have not decided it. Why? Already you know the answer. Tax rates on fuels are very, very high. Please don't keep on forgetting what we have discussed. Then it is basically a concept of 3 step forward, 4 step backward. You're not learning anything. Yesterday, I've told you how the fuel prices are decided. And I've told you the taxes are very, very high. 100% many of the times. Under GST, highest slab rate, highest tax rate is how much? 28%. How do you bring the fuels under the GST rate now? That is a challenge. The methodology may be decided in the future. Right now, there is no decision on it. And finally, the most recent current affairs point, the compensation. Okay, the compensation concept. What do you mean by compensation? Let me show a picture here. Please don't mug up calculation. I've given calculations here. Please don't mug it up. UPSC will not ask you this calculation. What is the idea of compensation? The compensation concept is very simple. Imagine you're a chief minister. You're a chief minister of the state. You know that you can change the rate of, let's say, sales tax. You can change the rate of many other indirect taxes as per your requirement and collect a lot of revenues. Any problem? Let me know. You're the chief minister. Your government can decide at what rate we should collect the taxes, and you will decide it based on your requirement. Now, what is happening is the central government is introducing a new concept, and they're taking away those taxes from you, and they'll put it under the GST. Now, what is the problem in GST? You alone cannot decide the tax rate. It has to be decided by the GST Council. I can understand. Until now, you alone could decide. The state government alone could decide the tax rates. But now those tax rates have been taken away, kept under GST, where only one state cannot decide anything. It has to be the GST Council. Simple question to you people. Will you be concerned about the revenue collection or not? Will you be very happy that the central government has taken away? Right? You will simply say, now I have one more person to point my fingers at. Or you are concerned about the tax revenue collection. You should be concerned. Somebody is saying no. You should be concerned. Why? Do you know how much revenue you are going to collect under GST? I have to understand this. Do you know exactly how much revenue you are going to collect under GST? No. But can you change your tax rate and collect the amount of required taxes? If those taxes are under you, I have to understand this, those taxes are under you, you are allowed to decide the tax rate. You can decide any tax rate as per your requirement. Today, you don't have that power. That power is there with the GST Council. So you should be concerned. You should be concerned because Centre is taking away a lot of these particular taxation powers. That is the precise reason what central government told was, once we implement the GST for the next 5 years, I will give you compensation. How it is calculated, don't worry, I will tell you that. Once the GST is implemented, for the next 5 years, I will give you compensation. How much compensation? 100% of the revenue loss. Please don't worry about the term revenue loss. I have not yet discussed it. I will tell it. 100% of revenue loss will be compensated. How? We'll explain that. Don't worry. But for how many years? For 5 years from the date of implementation of GST. Now, I'm pretty sure all of you know this now. 1st July 2017, GST has come into force. Any doubt in the date? Let me know. 1st July 2017, the GST has come into force. So 5 years. 5 years from 1st July 2017 will be end of June 2022. It's a simple calendar calculation. I don't start and don't sit and start literally counting the calendar sheets like this. Very simple. 1st July, end of June 2022. And I hope you know we have crossed June 2022, which means compensation period is already over. And that is a concern for the states now. That is a concern for the states. Now, how the compensation was calculated? What do you mean by revenue loss? Let's try and understand. Imagine there is a state government A, and whatever calculation I'm going to give now, it's a hypothetical calculation. Don't imagine that this is exact number for a particular state. From one state to another state, 28 states are there. Numbers have changed. Please don't mug up number for 28 states. You're simply wasting your time. So there is a state A. Imagine before the implementation of GST, there were 3 taxes, A, B, and C. I have to understand this. Imagine before the implementation of GST, there were 3 taxes, A, B, and C. Now, once the GST was implemented, A and B was subsumed under GST. Okay, A and B was subsumed under GST. C is still there with the state government. Right? Best example, alcohol. Now, understand this carefully. What was the revenue collection? How much taxes were collected by the state government under A and B for 15 and 16 is taken as a base. I'll repeat the statement. Sir, why 15 and 16? 1 year before the implementation. Simple. 1 year before the implementation, that's the reason that was taken as a base. So in 15 and 16, imagine the state government A imposed the A and B taxes and collected a revenue of 1,000 crore rupees. Now central government says, if you have collected 1,000 crore rupees, I'll simply assume that this should increase 14% year on year. I will repeat the statement. If you have collected 1,000 crore rupees in the base year, that is right, the 15 and 16. Again, don't say sir, base year for GDP. GDP is different. That base year is different. We are talking about compensation here. Focus only on this. So the idea was simple. How much have you collected in 15 and 16? I will assume that from this year to the next year, this revenue collection will increase by 14%. And that 14% was fixed, by the way, for all the states. Now apply the calculation. Have a look at the table here. Financial year 17, 1,000 crore should become 1140 crore. Financial year 18, it should become, I've rounded off the numbers here, it should be 1,300 crore. Right? That should again further increase to 1,481 crore. In 2020, it is a 1689 crores. And again, 14% rise, it should be 1925 crore. What do you mean by this? What do you mean by this? As per the government of India's calculation, in the financial year 21, you are supposed to collect 1925 crore under GST. I'll repeat the statement. As per the central government, the data calculation, by the way, you are supposed to collect, right? If you assume 14% increase, you're supposed to collect 1925 crore rupees in the financial year 21. But any guarantee you're going to collect exactly 1925 crores? There is no guarantee. What if you ended up collecting only 1900 crores? What if you collected only 1900 crores? Then the revenue shortfall will be 25 crores. Expected revenue is 1925. Actual revenue under GST is 1900 crore. Now the revenue shortfall is 25 crore. Central government says, I will give this particular 25 crore rupees to you. Is it okay? Right? I will give you this particular 25 crore rupees. That is the concept of GST compensation. This has been done. The same mechanism has been calculated or used for 5 years. Very recently, it has been stopped. Why? The 5-year duration is over. Now, some of you will say, sir, what if the amount of revenue collected is more than the expected revenue collection? I've given that example also. For financial year 20, imagine as per the calculation is 1689 crore and you have ended up collecting, right, 1800 crore rupees. Now, is there a revenue loss here? You are supposed to collect, you are expected to collect 1689, but you collected 1800 crore rupees. Is there any revenue loss? No, there is no revenue loss. Hence, the government of India will not provide any compensation to you. Is it okay? The government of India will not be providing any compensation to you. So this is how the calculation was done. Somebody says the basis should be 14 and 15. Please check it. As far as I know, it is 15 and 16. Right? It is 15 and 16. If it is wrong, let me check it. I know it is 15 and 16. Right? Check it. Right? So this is how the revenue calculation or expected revenue loss was calculated. Right? Somebody is saying, sir, why 14%? Negotiations happened. They decided, let's make it 14%. Why for 5 years? We expected that in 5 years, the GST would be stable and the states would not require any amount of revenue support from the center. These were the reasons, right, why this mechanism was used. Now, the next important point. Okay, next important point. When, right, when you say it will be implemented for a duration of 5 years and the central government will provide the revenue compensation, from where will the central government get this particular money? For example, in the financial year 21, right, how much is the revenue loss here? 25 crore. So central government is giving 25 crore rupees to the state government. From where will the central government get this particular 25 crore rupees? Simple. For this, the central government identified some of the commodities under 20%, 28% GST slab. I repeat, Government of India, right, brought in many goods under 28% tax rate. Some of them were identified. For example, tobacco products, right, soft drinks, etc. And apart from the GST rate of 28%, a cess was also imposed. Apart from the GST rate of 28%, a cess was also imposed, collected, and the central government will be using this money to provide compensation to the states. Central government will be using this to provide compensation to the states. Done? Right? So this is how the idea of a compensation was implemented under the concept of GST, goods and services tax. Next, we go to the next one. What type of taxes have been subsumed under GST? At the central level, I've given the list. Please try to remember 3 to 4. At the state level, I've given a list. At least try to remember 3 to 4. Now, here is my sincere suggestion. Please don't start reading all the taxes individually now. These taxes, no point of doing it. Absolute wastage of time. Why? These taxes are not individual taxes. They are part and parcel of GST. Meaning what? There is no independent tax by the name of central excise duty. It is a part of the GST itself now. So don't waste your time reading all these taxes. There are 40 to 50 types of taxes. Why do you want to take 1 year to read all of it? No need. Simply remember names. 3, 4 here, 3, 4 here. Okay, now many of you are asking, so why did Government of India or let's say GST Council agree with multiple tax rate under GST? Because if you remember, I told you the most important GST slabs are 5%, 12%, 18% and 28%. I repeat, most important GST slabs are 5, 12, 18 and 28%. Why did Government of India go for this structure? Why not have a single rate of GST, let's say 18%, let's say 15%, etc. Right? So why not go for that? Why did they go for this? Let me explain. What was the reason why Government of India or GST Council adopted this approach? And what are the concerns with this kind of a structure? First one, in India, can I simply say that the type of goods and services consumed by different people are different. For example, Mr. Mukesh Ambani will consume different types of goods compared to you and me. You and me will demand a certain different set of goods compared to, let's say, very, very poor household. Now, is it fair if I say that all the goods in India are taxed at 12%? Understand this. Is it fair to impose a simple rate, one rate, 12% on all the goods and services? Not fair. Why? Rich people should be paying more taxes. You should be, or I should be paying comparatively lesser taxes. And the poorest household should be paying very, very less taxes. So Government of India said, how can you have a single rate of GST on all the goods and services? That doesn't work out. I'll basically paraphrase a statement given by the Prime Minister as well as the late Finance Minister, Mr. Arun Jaitley. Both of them echoed that in a country such as India, you cannot have the same rate of GST on an Audi car and a Hawaii chappal. You cannot have a single rate of GST on an Audi car and a Hawaii chappal. That doesn't make any sense whatsoever. Done? So that is the first reason. Second reason is, some of you will say, sir, right, let's have a GST rate of 18% on all the goods and services so that the rich will pay more taxes. Then this becomes regressive on the poor people. Then some of you will say, sir, if it is becoming regressive, let's make 5% on all the goods and services. Poor people will get the benefit, but what about the tax revenues? Poor people, if the tax rate is only 1, let's say 5%, right, so that will protect the poor households. What about the tax revenues of the government? And don't you think the rich people should be paying more amount of taxes when they purchase a Rolls Royce or high-end luxury car, when they buy ticket for, let's say, luxury cruise? They should be asked to pay more taxes. That is how we can ensure the progressive nature of the indirect taxes like this. So, one, there are many consumer groups, you cannot have the same rate. If government imposes very low rate, tax revenues will be low. If government imposes very high rate, poor people would be affected. Right? That is the reason we have gone for this kind of a structure. And one more problem with the high rate of structure is, or high GST rate, single rate is, that will induce inflation in the market. that will induce inflation in the market. Right? So 18%, all the goods and services, 18%. Don't you think that will have an impact on inflation rate in the market? Of course, yes. That is the reason what Government of India did was very simple. We identified those goods which were consumed by poor people, kept it under 0%, 5% like this. We identified certain luxury goods, demerit goods, kept it under 28% like this. This is how the goods and services were divided under these particular rates. Now, if you have this kind of a structure, what is the problem? What is the problem here? The problem is simple. One, it will create a lot of administrative difficulties. There's a technical term here, let me explain. First and foremost, what do you mean by administrative difficulties? I will ask a question, just follow this. Imagine you're a manufacturer. You'll purchase 3 raw materials and produce 2 goods, 5%, 12% and 18%. And you'll produce goods which are taxed at 18% and 28%. This is a situation 1. This is situation 2. You're a manufacturer, you'll purchase 3 raw materials, let's say taxed at 12%, 12%, 12%. You will sell the good which is taxed at 18%. 1 or 2 goods, it doesn't matter. 18%. Right, again, don't worry about the numbers here. Don't worry about the numbers. In fact, right, I'll explain the problem related to the numbers also later. But let me ask you a very, very simple question. Would you want to be under situation 1 or situation 2? You're a manufacturer. Would you want to be under situation 1 or situation 2? Now, some of you will get very technical here. Right, you'll get very technical. We don't get technical here. Look at the only structure. Don't say, sir, this is leading to inverted duty, etc. If that is a concern, let me address that also. Right, because some of you have read this, you'll point out that, sir, situation 2 is a problem. Right, why problem? Those who are not understood, I'll explain that also. Don't worry. This is how it is done. Right, let's say 18%. I know the earlier one was correct. Right, see, I am getting confused now. Earlier one was correct. Right, so let me write it. 12%, 12%, 12%, 18% and 18%. Now, same question. Would you want to be in situation 2 or situation 1? Many of you are saying situation 2. Let me know why. When you say, sir, I want to be a manufacturer here, why? You tell me why you want to be here. By the way, it is wrong. You should not choose this. You should choose this. You tell me why. Once again. Just a second. I went reverse. Just a second. Those who have chosen situation 1. My mistake. Right, so, see, my mistake. Those who have chosen situation 1, let me know why. And by the way, situation 2 is correct. I'll explain. My mistake. I admit it. Right, so situation 2 should be your choice. Situation 1, you should not choose. Those who are saying situation Y, let me know why. Those who are choosing S1, why? What is the reason? Diversified taxes in S1. Is that the reason? S1 are different taxes, that's why. Okay, sir, my dear, by the way, if there are different taxes, don't you think you'll have to file multiple types of documents to the government? You'll have to file multiple documents to the government. You're getting more tax. You're a manufacturer. Why should you be worried about government tax revenue? By the way, I'm saying that you're a manufacturer. Where you want to be a manufacturer? Now you're saying, sir, I'm government, I want to be here. You're a manufacturer. You should choose yes 2, not yes 1. Why? Yes 1, whenever there are multiple tax rate like this, administration becomes very difficult. Why? Imagine you purchase 3 raw materials. Now you'll have to keep on proving to the tax official that, sir, when I purchased this raw material, I've used it right to manufacture 28% good also, 18% good also. I've used the 12% raw material here also. You'll have to keep on providing all the documents to the government official. Some of you say, sir, I will not provide government officials the document. What will they do? Simple idea. Follow this very carefully. There's a term called as ITC, input to tax credit. What is the idea of input tax credit? You are a manufacturer. You have purchased certain inputs and you have paid a tax of 10 rupee. Now you will sell the output. You will collect the 12 rupee. You give the 12 rupee to the government. Earlier 10 rupee has been collected by the government. I said yesterday we have discussed this. I said this 10 rupee will be given back to you by the government. But how do you think government will give you 10 rupees? There has to be a process. How do you think government will give you the 10 rupees? Process is like this, not required for UPSC. Process is like this. You will purchase the raw material, and when you purchase the raw material, you will ask the seller. You will ask the seller to provide a bill, to provide invoice to you. Now you have the invoice to prove that you have paid a 10 rupee tax. You will sell the good. You will generate a bill or invoice here also. Now, when you have generated a bill or invoice which proves that you have given 12 rupee, you have collected and given 12 rupee to the government will look at both of these bills. Government will look at both the bills. In first bill, bill 1 and bill 2. In the first bill, you have given government 10 rupee. In the second bill, you have collected 12 and given the government 12 rupee. Now, government will give back 10 rupee to you. Government will simply give you 10 rupee back. That is how the input tax credit mechanism actually works. Is it okay? Right? That is how the mechanism will work. So, again, understand this. If this is a situation, right, where you feel you're more comfortable, yes 1 or yes 2, it has to be yes 2. Why? Very easy to prove all of it. Second point is this. There is a term called as inverted duty structure. What is this inverted duty structure? In case of inverted duty structure, right, follow this carefully. You have paid taxes to the government. When you purchase raw material, you have paid taxes to the government, let's say 15 rupees. Follow this carefully. In inverted duty structure, when you purchase raw material, you have paid taxes to the government, imagine 15 rupees. And when you sell and collect the tax, give it to the government, it is less than 15 rupees, let's say 10 rupees. I will explain to you what is the problem. Just wait for it. Right? In case of inverted duty structure, the idea is simple. The rate of tax on the inputs is greater than the rate of tax on the output. Any problem? I'll repeat it again. The rate of tax on the input is greater than. Arey Baba, I'm explaining that only. I'm explaining and you're saying what is inverted duty. Like, listen to what I'm explaining. No, you're focused on something else always. The rate of tax on the input is greater than the rate of tax on the output. So whatever taxes you pay when you purchase the input, it is greater, it is more than whatever taxes you will collect by selling the good and collecting and giving it to government. Right? That is the concept of inverted duty structure. Sir, what is the problem here? What is the problem with the inverted duty structure? The problem is very simple. Creates complication in the tax system. Creates a lot of complication. You're paying more, right? And you're collecting lesser. As opposed to the concept, have a look at this. In this example, I'll use a different color marker so that you understand what I'm talking about. In this example, start answering. Is the tax on the input greater or the tax on the output greater? I'm talking about this example. Look at the numbers. It's not very difficult. Is the tax on the input greater or is the tax on the output greater? Somebody says input. Great, Baba. right? I don't know what you keep on looking in the numbers, right? I feel like, right, 10 and 12, 10 and 12, and you say, so 10 is greater. I don't know what to do now, right? So obviously 12 is greater. So this is the normal system. This is the normal system. But what happens in an inverted duty structure? Now again the same question. Is the tax on the output greater or input greater? Is the tax on the output greater or the input greater? Thanks a lot, right? The tax on the input is greater. Don't you think both the systems are different? Right, sir, what is the complication here? Complication is very simple. Imagine you're a manufacturer. Understand this very carefully. Imagine you're a manufacturer. Some time ago, I explained to you the ITC, input tax credit. What is the meaning of it? You have paid the taxes on the inputs. Now you will sell the output, collect the taxes, give it to government. Government will give back the taxes that you paid on the input. That is input tax credit. Let me ask a very simple question. You're a manufacturer. The amount of money you have for manufacturing is limited. I'm using the term money. They will use the term working capital. I'm using the term money. They will use the term working capital. The money that you have to spend on day-to-day basis. That is working capital. Now have a look at this. You have limited working capital. Simple question. Follow this carefully. What would be a preferable situation for you people? You want government to calculate ITC and give it to you, the amount, let's say after 1 month. How much money you would prefer? Working capital of 10 rupee or working capital of 15 rupees? Understand, you need analytical thinking here. Right, Are Baba, my fear is going correct. You need analytical thinking here. Please don't look at only numbers and come to conclusion. That is the problem with you people. Whatever money you're going to pay on input, you will get it, Baba. Right, don't say only 15 rupees because it is a bigger number. Please be careful. Don't say 15 rupees because it is bigger. You have given it, you will get it. Right, that is not the answer. 10 rupees is the right answer. Right, many of you are confused now. Sir, why isn't 15 rupee greater than 10 rupee? That is not the question here. The question is, you have a limited amount of money to manufacture and you pay input taxes. You pay input taxes. 10 rupee in one situation, 15 rupee in another situation. Now government will take 1 month to process both and tell you take it. Now would you want 15 rupee to get stuck up with the government or 10 rupee to get stuck up with the government? I have to understand now. That is the reason I'm saying think analytically always. Somebody will say, so 15 is greater than 10. I want 15. And you have paid it, you will get it. That is not the question. Question was, right, you have limited amount of money and you have paid the taxes on the input. 10 rupee, 15 rupee. Government will say, let's take 1 month to give it back to you. How much money you want the government, how much money you want to be stuck up with the government? It should be lesser amount of money. It should be lesser, right? So don't get confused here. So what happens in an inverted duty structure? What happens in an inverted duty structure? Larger amount of working capital is getting stuck. I'll repeat the statement here. Larger amount of working capital getting stuck up. And this is a problem. Why is a problem? Imagine you need money to purchase raw material, but the government of India has not given you ITC as of now. So what will happen? You will be forced to borrow from the market. Borrow and pay interest on that also. Don't you think that's a problem? Of course, yes, that's a problem. Whenever there is an inverted duty, and by the way, there is inverted duty structure now. In some of the sectors, for example, very recently, footwear structure, right? There was an inverted duty structure. So whenever there is a multiplicity of taxes, multiple taxes like this, right? There is always an inverted duty structure problem. Second, don't you think having multiple rates under GST goes against the central theme of GST? Central theme of GST is one nation, one tax. But is it one tax right now? No, name of the tax is one. But below that, there are multiple rates. There are multiple rates. Right? So this is how you need to address if there's a question on. So far it has not been asked. It can be asked. It can be asked. So done. Let's go to the next one. Right? So the idea of old taxation structure versus a new taxation structure. In the old method, goods were taxed separately. Services were taxed separately. Whereas under GST, there is no differentiation between good and a service. Single rate is applicable. Different states had different tax rates. And under GST, all the states will have the same rate of GST. National market was not possible earlier. Now the national market is possible. Earlier, it was a tax on production or origin-based taxation. Now it is a tax on consumption or a destination-based taxation. Earlier, there was an issue of cascading effect. Now that we want to address the cascading effect, it is not there. But please understand this carefully. Even today, we have not taken all the indirect taxes which are there in the system under GST. I repeat the statement. Even today, all the taxes, or that is indirect taxes, mind you, have not been taken under GST. And it will not happen soon also. It will not happen soon. A lot of discussions and deliberations have to happen. New mechanisms have to be introduced, etc. Now let me prove. Right, I'll give you two calculations. Right now I'm saying, please don't mug up calculations. Please don't mug up calculations. What you need to simply observe is following points. One, is there cascading effect or no cascading effect? Observe this. Don't mug up calculations. That is always my problem with the students. You miss out on the inference. You run behind what is unnecessary. Is there a cascading effect? Just observe this. Second, how GST will be working? Just observe it. Right? What is the CGST? How it will be divided? What is SGST? How it will be divided? Just observe it. Let me start with the pre-GST. That is before GST, there was a service tax, sales tax, VAT, etc. like this. What would happen? Just follow this. Manufacturer A will sell the good to B. A will sell something to B, either a good, right, or service. Don't worry, either a good or service. Imagine the price is 1000 rupee, and I've assumed there is a service tax of 10% on it. Now 10% of 1000 rupee will be how much? Simple number, 100 rupee. So when B will purchase, what is the cost? What is the cost? 1100 rupees. Now understand this carefully. It is a service tax. When it is a service tax, who will collect this particular service tax? Central government. Any doubt here? Service tax is collected, imposed and collected by the central government. Now, you want to manufacture and you want to sell it and you want to add profit of 1000 rupees. But there's a problem. The government, that is the state government. Understand this. Now, when you're selling the product, the state government will impose, let's say, VAT, sales tax, etc. Now, you want the state government to provide input tax credit. Will they give it? I have to understand this. You already have paid a service tax of 100 rupee. You want to manufacture the product and sell it. State government says, I will also impose a VAT or sales tax. But you tell the state government, I've already paid a service tax of 100 rupee. Will the state government give you a refund? Input tax credit? Absolutely no. Why? Same logic. You have paid to center. Now you're asking for ITC from the state. They will not give it. Now, as a result of this, what will happen? You will include the cost of tax also. You'll include tax as a cost and right, add profit. You want to sell it at 2100. Now state government will impose again a 10% tax. So 2100 plus 210, you will end up selling the product or let's say the service at 2310 rupees. Let's find it out. Is there a cascading effect here? Is there a cascading effect here? Yes. Right. Second, somebody says it is intrastate. Just follow this very carefully. If it is a VAT, you will get the input tax credit because it is intrastate. Same state is collecting, same state will give. Here it is a service tax. Service tax is collected by the central government and you're expecting ITC from the state government. Right? Just follow the discussion carefully. Is there a cascading effect? Yes. Is the burden of taxation very high on the customer? Of course, yes. Shift it to the concept of GST now. Right? Shift it to the concept of GST. Follow this carefully. First step, nothing will change. First step, nothing will change. Price is 1000 rupee, GST of 10%, 100 rupee. B will purchase it at 1100 rupees. Now, when they want to manufacture and sell this, rather than counting 1100, I've written 1100, but I will tell you the correction also. Rather than simply counting 1100, they will simply consider this as 1000 rupee. Follow this carefully. Right? Rather than counting this as 1100, they will count it as only 1000 rupee. Sir, why not 1100? The person has already paid a GST of 100. Remember the term? Under GST, government says you will get, I have written ulta, you will get input tax credit. You will get input tax credit of 100 rupees. So if you're going to get 100 rupees, will you transfer it to the customer? No, you will not transfer it. You will leave it. Now 1000 rupee is your raw material cost. You have added a profit of 1000 rupee. You want to sell it at 2000 rupee. Now government will again impose a GST of 10%. 200 rupee will be the GST. Now the seller will purchase the product at 2200. Let me explain how GST will work now. Let me explain. In the first step, there is a GST of 100 rupee. Done. In the first step, a GST of 100 rupee. Second step, GST of 200 rupee. Now look at the calculation and tell me, is there cascading effect? First question, is there a cascading effect? If somebody says yes, then I'll drop and take sannyas. Right, because we have discussed this so much, right? The idea of a cascading effect, we have discussed so much. If you say yes, sir, there's a cascading effect, right? Please be very careful. So understand the logic here. Cascading effect is tax on a tax. In the first step, I've imposed a tax of 100. In the second step, 2000 rupee. What is this 2000? 1000 rupee raw material cost, 1000 rupee profit. Where is the tax here? So there is no tax on a tax. Cascading effect is not there. That's the first thing. Second thing, sir, how GST will work out? How the distribution will happen? Follow this carefully. Right? Imagine you are B. Imagine you are B here. Right? In the first step, you have paid a tax of 100. Right? And the second step, you have paid, that is, you have collected 200 from the customer, given it to government. Government says, I will give this 100 rupee back to you. Total amount is 300. Understand this carefully. Total amount is the tax of 300 is there. But the 100 which is collected will be given back to you. The 100 which is collected is given back to you. So government has collected how much taxes? I understand if the ITC is given to you, government has collected now how much taxes? 200 rupees. I've written it here. Government has collected finally how many taxes? 200 rupees. Now divide this equally. Divide this equally. 100 rupee and 100 rupee. So that 200 will be divided into two equal parts. 100 rupee will go to central government. 100 rupee will go to the state government where the consumption has happened. Where the consumption has happened in the same state. You don't have to be worried. It has happened in the same state. That is intrastate. So because the consumption has happened within the same state, right? So the state government will get the 100 rupee GST. Done. Next, right? Isn't it loss of revenue for the state? How? Prove it. When you say there is a revenue loss, how? Tell me. Right? So don't simply say there is a revenue loss. You will have to tell me why there is a revenue loss. Only then I can explain to you what is your concern. Now let me go to the next one. Arey Baba, isn't GST 300 rupees? Dinesh, follow this, Baba. In 300 rupees, 100 is the tax that you have paid on the input. That has been given back to you. Right? I've told everything, but I don't know where you keep on looking at or listening. You have paid the tax on the input of 100 rupee. I told, even I've written it. I've told it and I've written it also. That 100 they will give back to you. Right? So if the 100 is given back to you, where the GST is totally 300, it has to be 200 rupees. Okay. Next, interstate. Interstate. Right? Now understand the logic here. Under the concept of interstate, good is produced in one state, moved across the border, sold in another state. That is interstate. What will happen in the pre-GST era? Right? What will happen in the pre-GST era? Right? The price is 1000 rupee. Imagine, right? It is moved from one state to another state. 100 rupee will be central sales tax. It will go to state one. It will go to state one. Imagine your company B, you'll purchase the raw material at 1100 rupees. Okay? 1100 rupees. Now, will you get 100 rupee input tax credit? You already know the answer. Will you get the CST 100 rupee back? No, you will not get it. So what will happen? You will consider the cost price as 1100. You want to earn a profit of 1000 rupee. Selling price will be 2100. Let's say either you're selling in the same state or another state, doesn't matter. Same state or another state doesn't matter now. Why? If it is another state, again CST will be imposed, given to the second state. That will lead to again cascading effect. Or you're selling in the same state. The state government will impose a VAT. Anyways, there is going to be a cascading effect. 2100, 10% of this is 210. The market price will be 2310 rupees. Next, GST. Under GST, right, what will happen? Under GST, right, what will happen? Price is 1000 rupee. IGST, remember this. Why? Interstate. Interstate, it is IGST. So IGST is a 10%, 100 rupee. So in the step one, IGST of 100 rupees collected. Cost is 1100. But please understand, again you know that rather than counting 1100, you will simply take it as 1000 rupee. Why? You know that you will get input to tax credit. So this is 1000. Profit is another 1000 rupee. What will be the selling price? The selling price will come to 2000. Either same state or another state, again doesn't matter now. Right? Let's say you're selling it to another state here. Again, IGST of 10% is collected. 10% of 2000 is a 200. Final price of the good is a 2200. Now start answering. In pre-GST, is there a cascading effect? Right? In pre-GST, is there a cascading effect? Yes. In GST, that is interstate, shifted to the second part. In GST, that is interstate, is there a cascading effect? Right? Start looking at the numbers, you'll understand. Is there a cascading effect? No, there is no cascading effect. Now, I want to find out how these particular taxes will be divided. Let's start. In the step 100 rupees collected. In the step 2, how much is collected? 200 rupees collected. But imagine you're the manufacturer. Imagine your company B. You have paid IGST of 100. That will be credited back to you. Is it okay? That will be credited back to you. So out of total 300, 100 is credited back. How much is the actual GST collection? It is 200 rupees. Is it okay? It is 200 rupees. 200 is the GST collected after providing the input tax credit. Now have a look at this. 200, divide this into two equal parts. 200, divide this into two equal parts. That is 100 plus 100. First 100, as usual, will go to central government. Second 100 will go to the state where consumption has happened. I'll repeat the statement here. Right? The second 100 will go to the state where consumption has happened. In this example, where is the consumption happening? The consumption of the good is happening in the state 3. It is the state 3 which will get the SGST component. This is how GST is a much better system. This is a much better system compared to earlier VAT system, service taxes, central sales tax, etc. Because under the GST, either the good is sold in the same state or different state, doesn't matter. At every step, government will provide input tax credit. And because you get input tax credit, you will not have any problem in reducing the tax component in deciding your selling prices. Otherwise, please be very careful. What will happen is cascading effect will increase. Cascading effect will increase. Burden of taxation will fall on the customer or a buyer. Now, many of you are concerned about state 1 here, state 2 here under GST. Your assumption, follow this carefully. Your assumption is that always this will happen. State 1 will produce, state 2 will consume. Follow this carefully. Right? You people need to think like this. Your assumption right now is always state 1 will produce. Whatever they produce, they will sell in state 2. Hence, state 1 will not get anything. Now, answer this carefully. Do you think this is the situation always? I'll repeat the statement. Do you think this is the situation always? That is, whatever is produced in state 1, they'll simply sell it in state 2. Imagine this particular flask is produced in state 1, everything they will sell in state 2. Do you think that will happen? And just apply the logic, you will realize, no, that will not happen. Some of it will be consumed in the same state. Some of it will be consumed in the same state. So they will collect the SGST component there. And apart from this, there is a state 3, state 4, where the production will happen, consumption will happen in state 1. They will also get the SGST component there. So do not assume like this, there is always one-sided right arrow mark. No, that is not the eventuality, or that is not a fact in the economy. Right? For example, like many of you, I was looking at the comments, many of you said, so if this is the situation, then the state of Maharashtra will not get anything. State of Tamil Nadu, state of Gujarat, they are not going to get anything. That is not true, by the way. That is not true. Right? Why? First and foremost, you just check what is the state GDP of Maharashtra, Tamil Nadu, Gujarat. These are the states which are very, very big. Right? Very, very big states. Big states in the sense, not sizes. I'm talking about GDP value of the states. And when you say GDP value of the states, go back to basics. Go back to basics. What is GDP? The market price of all the final goods and services which are produced. So if they are producing more, right, all the production, they will not sell it in other states. They will consume. Why? So why some of it will be consumed in the same state? Apply logic, you will understand. If the production is higher, what about salaries in the state? Let me know. If the production in a particular state is higher, the households in the state, will their salaries be higher or low? Their incomes will be low. If their incomes are higher, what about demand for goods and services? You know the answer to this. So again, please do not forget your basics. Go back to basics, you will get the answer there itself. Done? Okay, next. The idea of Subramanian Committee, Arvind Subramanian Committee. Old committee, but even today recommendations are important. One, the recommendation was, whenever you introduce a new tax structure like this, the structure of the tax should be simple. It should be simple. Why? Imagine you're a company. I'm asking you to adopt a new taxation methodology. What would you like? The new tax should be simple to adopt and implement. A new tax should be very complicated. You know the answer to that. Have you understand this? You know the answer. Right? Don't say, sir, I like complicated things. Right? Don't try to do that in the exam. It should be simple. So first recommendation was, new tax structure should be simple. Right? So that even the people or the companies who are going to adopt it, they will not feel the burden of it. And the tax officials who are implementing it, they will also not be feeling the burden. Second, this committee recommended, we should have 3 rates. Under GST, we should have 3 rates. That is, 1, lower rate at 12%. Recommendation was simple. Identify certain goods and services which are consumed by poor households and impose a lower rate of taxation. Then there are demerit goods, tobacco, right? Products such as alcohol. Alcohol is not covered. That's the reason I'm saying. Right? There are products such as soft drinks. These are sin goods or demerit goods. Impose a very high rate of 40%. And there are certain goods and services which will not be falling under this category as well as this category. Impose a 17 to 18%. This was the recommendation. Not implemented. This was the recommendation. Next, alcohol and real estate. Right? These are the areas which are right now not covered. As per the discussion, not covered. Try to bring them under GST. I do not leave this. Try to bring them under GST. Why these products are? 1, alcohol generates a lot of revenues. And please understand, logically also it makes sense to have all the goods and services under the ambit of GST rather than removing this, taxing differently. So real estate accounts for a large amount of cash flows. Black money circulation is very high. Include real estate also under GST. Next, provide compensation to the states. Provide compensation to the states so that the states will be on board for implementation. And finally, evaluate the implementation of GST after regular intervals. You have brought in a new system. Review the system. That is one more recommendation. So these are the recommendations given by Subramanian Committee. Next, goods and services tax network. GST is already, you know the expansion. What is N? It is standing for network. Goods and services taxes network. GST network. First and foremost, remember this. It is a non-profit organization. Right? What do you mean by non-profit organization? Generally, we use a term called as Section 8 companies. Remember this. There is a term called as Section 8 companies. Right? These are the companies which are registered under the Companies Act. Have you understand this? Section 8 companies are those companies which are registered under the Companies Act. But remember this, whatever profits are generated, these are not given to the owners, rather they are reinvested. I'll repeat the statement here. Very often you'll come across the term Section 8 companies or non-profit organizations. What do you mean by that? These companies will provide services, will sell something, give something in the economy, and may or may not collect charges, earn revenues. But the profits are not given to owners. They are never given to owners. Why? By nature, these are referred to as non-profit organizations. Best example, charitable institutions. Charitable institutions. There are a lot of charitable organizations in the economy. Do you think the one who has started the charitable organization is working for profit there? Right? I have to understand this. There are a lot of charitable organizations in the economy. If you start a charitable organization, are you working for a profit? Right? People will hit you. Again, don't write that in the exam. Why? By nature, this is a charity. By nature, this is a charity. Right? So understand this. Those companies which are registered under Companies Act under Section 8, these are called as Section 8 companies, non-profit organizations. GSTN is registered under the Companies Act Section 8 of it. Now, what is the role of the GST network? What is the role? Let me explain it. Follow this carefully. Government of India has announced and implemented GST. Government of India has announced and implemented GST, Goods and Services Tax. Now, don't you think there should be one company which will provide services such as registration of the taxpayers? Registration of taxpayers. If you have a different opinion, let me know. Government of India says we should implement the GST and have implemented it. But if you are a manufacturer, don't you want to register? You don't want to be registered under GST? No, you want to be registered. To which authority, to which company, you should provide all the receipts because you'll have to keep on filing the tax returns. Filing means what? You're giving the documents to the government. So you need to have one authority which will have the registrations done, which will also conduct the profile analysis. Profile analysis means what these companies are doing, how much taxes are they paying, how much revenues are they reporting. All the analysis has to be done, given to government. You need one authority where you can file the returns, get the input tax credit, etc. All of this is done by Goods and Services Tax Network. Is it okay? Goods and Services Tax Network. Right? So GSTN is that authority which has been set up by the government, which will provide all this infrastructure to you people. Right, sir? Very difficult to understand it. Not very difficult. Imagine it, you'll understand. I'm pretty sure most of you have got a passport. Most of you have your passport. Now understand this. When you have your passport or when you apply for your passport, do you think the Minister of External Affairs will come to your home, check your documents and approve your passport? Right? No. Right? There is one more company. Right? If you have been, you'll realize this. There is Tata company, Tata Consultancy Services, right? Which they will basically take care of the activities, provide all the services. Finally, it is the Government of India which will give the passport to you. I'll give you another example. When you file your income tax returns, ITR, income tax returns, that is you're giving documents to Government of India and you're paying income taxes to government. Do you think the Government of India, there is a finance minister will keep on checking your documents? Do you think everything is done by the government? No, there are different companies which are involved. Best example, Infosys. The best example for this is Infosys itself. So that is the reason, remember this, for implementation of goods and services taxes, we set up one authority. That is the function of this authority. Registration, getting IT returns, getting GST returns filed, right? Ensuring that the profile analysis is conducted, etc., etc., etc. Now, when we set up the GST network, there were private sector companies. Understand this. When we set up the GST network, there were private sector companies which were owning part of it. How much? Private sector companies owned 51% in the GST network. Central government plus state governments owned 49% in the GST network. I'll repeat it again. GST network, when we set it up, for 51% of it, right, is owned by private sector companies, and 49% was owned equally between central and states. Right, now what the central government says is, no, I don't want the private sector to be owner of this. We will convert the ownership. We will make completely owned by central plus states. Center 50%, state 50%. We want it to be under the ownership of government only. This is the idea of Goods and Services Tax Network. Okay, let me go to the next one. The concept of anti-profiteering. Okay, the concept of anti-profiteering. Right, somebody put a comment, sir, economics is very boring. I can't help it. If it is boring for you, right, don't worry. What is required for UPSC? Understand that. Right, so understand the logic here. Whether you're interested, not interested, the UPSC doesn't care for it. Very simple. Doesn't care for it. You have to score marks, and that should be your objective also. That should be your objective. Don't try to become a CA in economics. You can't. I will guarantee it. In 2 months, you can't become a chartered accountant by studying only what is required for UPSC. That should not be your goal also. Your goal should be, sir, is it required for UPSC? Okay, I will learn it. So that I can answer the questions asked in UPSC. Okay, let's start. What is the idea of profiteering? Let me explain it to you. Imagine I'm a shopkeeper, right? I will put you in the spot so that you understand it correctly. Imagine I'm a shopkeeper. I want to sell a good at 100 rupees. Government will impose a tax of 15 rupees. So I will sell it to you at 115 rupees. Second, government has reduced the tax from 15 rupees to, let's say, 5 rupees. Follow this carefully. Right? The government has reduced the tax from 15 rupees to 5 rupees. Now, if the selling price, if I sell at the same price, that is 100, include the 5 rupee tax, I will have to sell it at 105. Now, rather than doing this, I should have done it. Have you understand this? This is yes1, this is yes2. If the taxes are reduced, I should sell it at 105 rupees. Rather than this, I will sell it to you at 108 rupees. I repeat, government has reduced the taxes from 15 rupees to 5 rupees. If I wanted to provide the benefit to you, complete benefit by the way, I should have reduced the tax, I should have reduced the MRP from 115 to 105. But rather than that, I've reduced the MRP from 115 to 108. First question, follow this carefully. First question, have I transferred the complete benefit to you? You should be able to answer this. Have I transferred the complete benefit to you? If this is my selling price, don't say sir, yes to yes. If this is my selling price, have I transferred the complete benefit to you? No. Government has reduced the taxes by 10 rupee, but I have reduced my MRP by only 7 rupee. I have not done it. But what is happening here? If you shift from S1 to S3, why am I doing it? Simple. Tax is 5 rupee. What will be my selling price now? My selling price will be 103. Now answer to my question. If I move from S1 to S3, am I making more profits? I will repeat the statement. Right? If I move from S1 to S3, am I making more profit? Sir, what about S2? Earlier also I was making profit. Because please understand, earlier when I decided to sell 100 rupee, it was including profit only. Have you understand this? Don't jump to a conclusion there was no profit earlier. When I decided 100 rupee, it was including profit. But now, by reducing the price from 115 to 108, has my profit increased? Yes. Government calls this as profiteering. Understand this very carefully. Government calls this as profiteering. What is profiteering? Whenever government reduces the taxes, you do not completely provide the benefit. You do not transfer the complete benefit to the customers. and earn more profits, that is profiteering. Is it okay? That is profiteering. If you move from S1 to S2, government says we are okay. Have you understand? If you move from S1 to S2, government says we are okay. Because why? You have completely transferred the benefit to a customer. But if you move from S1 to S3, government says not done. This is not correct. Why? You are making more and more profits at the expense of the customers. Why at the expense? I have reduced the taxes by 10 rupee, but you have reduced your prices only by 7 rupee. What does it mean? You're earning 3 rupees extra profit now. Profit was already there. Now you're earning extra 3 rupee profit. This is called as profiteering. Now, is there a danger of profiteering in the economy? Have you understand this? Is there danger of profiteering with the introduction of GST? Yes, there is a danger of profiteering. So for addressing this, what Government of India has done is they have set up an authority, National Anti-Profiteering Authority, NAA. National Anti-Profiteering Authority, NAA. What is the role of a National Anti-Profiteering Authority? NAA will take the complaints from the consumers, and investigate, or else they can suo moto, take up the cases and investigate. And if they find that I am involved in profiteering, they will impose penalties on me. I repeat, if they find that, right, if they find that I am involved in profiteering, they will impose penalties on me. And in extreme cases, they can even cancel my license. They can simply cancel the license of the seller, manufacturer, if they are found to be involved in profiteering cases. That is the concept of anti-profiteering measure. Now there is one more technical term, sunset clause. Now please observe this. I will tell you a definition, but even after that, you will ask me, sir, definition. What is a sunset clause? Sunset clause simply refers to an expiry date. There is no definition, by the way. There is no standard definition. But what do you mean by sunset clause? It is an expiry date for a provision or a measure. It is an expiry date for a provision or a measure. What do you mean by this? You're sitting on the table, or let's say, right, on some right, let's say, bed, etc. Just look around you people. You will see a biscuit packet. You will see a box of chocolates, or you will see a bottle of, let's say, a soft drink, etc. And if you take it and clearly see the layer as such, that is the labeling as such, you will see they will have written expiry date, or they will simply write best before, etc. And if I write an expiry date on a product, what does it mean? If you understand, if I write an expiry date on a product, what does it mean? After this particular date, after this date, the product is not useful. Have you understand this? After this date, this product is not useful. That is the meaning of expiry date or a best before date. Now let's look at this. There is a sunset clause of 2 years for the GST network. Meaning what? We set up the GST network in 2017. And if I say sunset clause of 2 years, it simply means plus 2 years, the GST, the NA, not GST, the NA, National Anti-Profiting Authority will be closed. Is it okay? After 2 years, the National Anti-Profiting Authority will basically close, will wind up. That is the meaning of 2017 plus 2019. Okay, that is the meaning of the term sunset clause. Now, why I'm telling you about this? If you keep on reading the newspapers, I will guarantee this. In 2022, we are in 2022, in November and December, this will be there in the newspaper. I'll tell you why. In November and December, this authority will be again there in the newspaper. Why? Look at this. When we established it, there was a sunset clause of 2 years, which means we should have closed the authority in 2019. Did we do that? No. We extended by 2 more years. We extended this by 2 more years. Right? Plus 2 will be how much now? 2021. So in 2021, we should have closed the authority. We extended it by 1 more year. We have extended the tenure of the authority by 1 more year. Right? So it simply means we are supposed to close this authority in 2022. And that will come in the month of November and December. That is the reason I'm saying, please be careful. This will come in the newspaper in the coming days. Done? Okay. Right. So this is regarding National Anti-Profiteering Authority. What has been the achievement? Right? What has been the achievement of GST? 5 years we have implemented. What has been the achievement? Please understand this. Under GST, to a very great extent, we have been able to address the issue of cascading effect. We have been able to address it. Lot of goods and services. What is the number now? 1,399. Right? 1,399 goods and services, right, have been brought under the ambit of GST. Right? Out of this, right, have a look at this. 18% slab. There is a rate of 18%. I hope you remember. 18% GST rate consists of the goods and services, right, which are 46% of the total value. Out of all the goods and services which are sold, 46% of it basically fall under the rate of 18% GST. Next, right now under 28%. When we introduced it in 2017, there are more than 220 products which were covered under the 28% slab. Right now, only 37 products or goods plus services are there in the slab. Right, the highest amount of GST revenue collection in this, it says April, but this was published way before. Right, the data has been reached already. Don't mug up this also. Right, so these are some of the achievements of GST. Now, can you see this particular slide? That is a graph. I'll start asking questions. Try to find the answer and let me know the correct answer. First statement, first question or first statement. The amount of GST revenue collection has consistently increased in the last 5 years. I will repeat the statement. These kind of questions are favorites of UPSC. Please be very careful. The amount of GST collection in the last 5 years has consistently increased, and you just need to observe. You don't need to calculate anything. You need to observe. Some of you are saying yes. It simply means you do not even know how to look at the numbers now. That is much more concerning. This is the amount of GST revenue collection. Just look at the number, Baba. Just look at the number. How do you say the GST revenue collection has increased in the last 5 years? It was 7 lakh crore rupees. 11, 12 has fallen down to 11. Does it mean it has increased? I don't know. How do you measure increasing, decreasing, bigger, smaller? I'm absolutely confused. Or should I say I'm actually dumbfounded by your answers. Why? Why there is so much of confusion? Question was very simple. And somebody said because of COVID. I just hope and pray that will not happen in the exams. I just hope and pray that it will not happen in the exams. Right? The answer was very simple, straightforward. It is there in the slide. But even there, you're making a mistake. Right? So understand this. This is one type of a question. Second, just to confuse you. Look at the statement here. The growth rate in the GST revenue collection has consistently been increasing in the last 5 years, year on year. I will repeat the statement. The growth rate in the GST revenue collection, and by the way, it is there in front of you only. Right? So the growth rate in the GST revenue collection year on year has consistently increased in the last 5 years. Answer is no. Why? Look at the data, you will understand. Look at the data. Right? 9.2, 3.8, right? Minus 6.9. Right? So there is no consistent rise like this. Third one, right? The third kind of a statement. The revenues, the GST revenues as a percentage of GDP in the last 5 years, right? One kind of statement could be like this: have consistently increased. Have you understand this? So please give answer. Arre Baba, right? Wrong. First one wrong, second one is also wrong. Okay, so I will look at this. The GST revenues, right? The GST revenues as a percentage of GDP. I'll ask one question here: have consistently increased in the last 5 years. Statement is wrong, by the way. Data is there in front of you. Have a look at it. Second, this can also be asked. The GST revenues as a percentage of GDP since implementation has been more than 5%. Can this kind of question be asked? Of course, yes. They can ask you. No book will give you the answer for this. Don't say, sir, none of the books this was covered. They will not cover it. I don't expect them to cover also. By the way, the second question that I asked, the answer was yes. Done? Okay. Right. So basically, this is how the UPC can ask the question. Please be very, very careful. Very, very careful. Now, finally, what are the concerns related to GST? We have to address that also. What are the concerns? Right. So how should we remember? As much as possible, whenever graphs are given in the newspaper, have a look at it. I will tell you a trick. I'll tell you a trick. Trick in the sense of where to look. In Hindu newspaper, every day, in the central page, that is editorial page, there will be one or the other graph given. You don't trust me? Please take out the newspaper and have a look at it. You will realize. Is it okay? Please take out the newspaper, central page, just to see one or the other graph is given every day. Now, should you read every graph and remember? Not required. At least the ones which are relevant for UPSC. For example, if there's a graph related to poverty, please take it. If there's a graph related to GST, take it. If there's a graph related to, let's say, income tax collection in India, take it. Why? You can use it either to write an answer in the UPSC maze, or second, if at all suddenly a question is asked in UPSC, you are safe. Then let me go to the next one. What are the concerns related to GST? What are the problems? Let's discuss this. Then we'll take the break. Don't worry. First one, compliance burden. Now, before you start writing compliance, let me define it. I am telling, let me define it. Because I'll be defining, you people are focused on writing the question. Please don't do that. I will define, wait. What do you mean by compliance? Compliance simply means the time and the expenditure. Manufacturers will have to bear. Manufacturers will have to incur because of government policies. So what do you mean by this? Let me give a very simple example. And the term compliance is very common. Don't assume that compliance is always associated with GST only. No, it is common. Now understand this. Imagine you're a manufacturer. Very small manufacturer. You are not a crorepati, you are not a Tata, Birla, etc. You are a small manufacturer. Now, you are first and foremost working with, let's say, 3 people or 4 people, and you're manufacturing, selling goods. Now, GST has been introduced. A concept of GST has been introduced. I hope you remember this. If you're a manufacturer, you'll purchase raw materials. And when you purchase raw materials, I hope you remember this particular point, you'll have to collect bills. When you will sell, you'll have to generate bills. Now, start looking at this. You're a small manufacturer. You'll have to collect receipts like this. When you sell, you'll have to generate them, by the way. Collect it. When you purchase, collect it. And you need to file. You need to provide all of these documents to the government. Now, understand this. Because you're a very small manufacturer, you may or may not have the knowledge of how to operate these systems. Right? I understand this. You may or may not have the knowledge of how to operate these particular systems. Now, what you will do? You will hire a chartered accountant. And now, do you think the chartered accountant is going to provide the service for you for charitable reasons? The CA will simply say, don't worry about money. I'm here for charity. I have struggled the last 6 years to pass a CA just because I want to do charity. Now, what I will do is, right, you keep on giving this work to me and I will keep on doing it free of a cost. Will this happen? No, they will charge you money. Now, can I simply say that because government has implemented GST, you as a manufacturer will have to incur more expenditure. Yes or no? Let me know. You'll have to incur more expenditure. Right? Imagine you have to print the bills. You'll have to purchase, right, let's say laptops or let's say computers. You'll have to do all of this. As a result of this, you will incur expenditure. That is nothing but compliance burden I'm talking of. Is it okay? Right? That is what is the meaning of the compliance burden. In order to follow the guidelines of the government, you will be forced to incur expenditure. Let me give you another example so that you quickly understand. After the second wave of the pandemic, when the people started going back to offices, government told the companies, install sanitizers. I hope you know this. Install sanitizers everywhere like this. Now, if a company will keep sanitizers everywhere, is it okay if I say the expenditure of the company increases? It's a very simple concept. The expenditure of the company increases. And why is the company increasing expenditure? Because of government policies. So this is called as a compliance burden, and the GST compliance burden has increased. Second, there are multiple tax rates. We need to rationalize this. I have to understand this. There are multiple tax rates. We need to rationalize. Rationalize means what? Rather than having, let's say, 4 tax rates, 6 tax rates, we need to reduce the tax rates. Now, how this can be done? I'm giving you a solution. Please remember this. There is a slab called as a 12% and 18%. There's a slab called as 12 and 18. Many of you simply say, sir, merge both of them, 12 and 18, make the GST rate 15%. This is a fault. This is wrong. There is a concern here. Why concern? Because many of you simply say, sir, 12 and 18, the middle point is 15. You don't trust us. Open your mobile because you have it. Open it. Use the calculator. You'll get 15. My answer is simple. When you take only 12 and 18, your number is correct, 15%. But what about the value of goods and services which are taxed under 12 and 18%? Is okay? What about the value of goods and services which are taxed under 12 and 18%? Who will take that into consideration? Sir, what do you mean by that? Let me explain. Imagine under 12%, 100 crore rupees worth of goods and services are taxed. If you're going to tax 100 crore worth of goods and services, how much money you will collect? 12 crore rupees you will collect. Any problem? Let me know. Right? 100 crore is the value. 12% of it is 12 crore. And under 18%, 500 crore worth of goods and services are sold. Now, many of you say, sir, how can you say under 18% the value is greater? I will tell you, why have you forgotten this? Why have you forgotten the point that we have discussed? 46% of the goods and services valued are sold under 18% only. And that's a fact. I'm not making it up. So 18% of 500 crore will be how much? 90 crore rupees. Right? So logic is simple. Under the current structure, you're collecting 102 crores. Under the current structure, you're collecting 102 crores. Now what you have done, 12 and 18 you have merged, you are counting 15%. You are calculating 15%, right? 100 plus 500, 600 crore rupees. So 15% of 600 crore will be how much? 90 crore rupees. Have you increased the tax collection or have you reduced the tax collection? In fact, your tax collection has come down. But some of you simply say, sir, it is just 12 crore rupees, right? Jani do, 12 crore rupees, let's leave it. No. Why? I've taken simple numbers here. As per government documents, if you do this, government will be losing a revenue of around 1 lakh crore rupees. If you do this, government will be losing a revenue of around 1 lakh crore rupees. Do you think 1 lakh crore rupee revenue loss is a small number? Then think again. No, it is not a small number. So what we need to do is bring in a new system where we will reduce the number of GST rate without losing the revenues. So any solution for this? Of course, yes. There is one authority by the name of NIPFP, National Institution of Public Finance and Policy. I repeat, NIPFP, National Institution of Public Finance and Policy. What this recommends is follow this carefully. Merge 12 and 18%. Merge, right? And by the way, when I say plus, it is merge. Don't say add, right? Merge both 12 and 18%. Make it as 15%. Make it as 15. Now, before you jump to conclusion and say you're repeating, let me go ahead. Now, this authority says, if you do that, and if you do this, you will be losing a lot of revenues. You'll be reducing the number of GST slabs, but you're losing revenues. So what can be done here? 5% is there, increase it to 8%. 5% is there, increase it to 8%. 28% is there, increase it to 30%. So that whatever revenue loss you're going to incur here, you can recuperate. You can basically collect those particular revenues. So remember the recommendation also. Don't always say these are the problems. Give way forward also. Give recommendations also. Done. Then what about the states' revenues now? With the GST compensation getting over, there is a concern of revenues of the states. As of now, central government has not given any formula after that. Central government has stated 5-year duration is over. We will not give you any compensation. But the states are concerned. They are definitely worried about it. And finally, what about those particular goods and services which are not covered? Alcohol is there out of GST. Bring it. Right? Aviation turbine fuel, there is no GST. Impose it. Petrol and diesel, impose it. But how? That you'll have to wait and see. Right? So these are some of the concerns related to the GST structure we have today. Okay? Right? So this is the discussion regarding GST, and this is the end of the discussion for GST. Right? So give 10 minutes break because other faculty gave 10 minutes. Other faculty taught another subject. I am teaching another subject. Right? Don't compare faculties. Don't worry. Don't compare faculties. And if you're concerned about break, let's take a break of half an hour then. Right? Why always worried about break? Why always worried about break? Right? You should be worried about learning. Worry about learning. Worry about whether this is necessary for UPSC or not. That should be your concern. Right? Please don't worry about break. 10 questions and well, yes, my dear, both are again. Nobody who is not a commerce background student will ask for UPSC. Leave it. Those who are there in the business, they will need offsetting, not you people. So the argument when we set up the idea of GST, the NAA was that in 2 years the competition will increase, the private sector will absorb the GST structure, and because competition will increase, the one who will provide the complete benefit to customer, people will purchase their goods. The other one who is not going to provide the complete benefit, people will stop purchasing their goods. So because it is a competition, because the companies are competing with each other, they will be forced to transfer the benefit. I'll give a very simple answer. Understand this. Imagine you want another product is charged at 21 rupees. A is 20, B is 21. Most of us will end up purchasing A. I hope you understand this. Some of you say, no, sir, I will look at the quality, I will look at that, I will look at this, etc., etc. You're a small minority, right? You're a small minority. You're not the overall economy. And what happens is, people are very price conscious. You are very price conscious. I'm also very price conscious. If you don't trust me, just look at what kind of the batteries or cells we are using in the remote control. We will pay 2 lakh rupees, 80,000, 3 lakh rupees to purchase a TV. But when it comes to the question of putting the cells or batteries in the remote, we'll put every day, not a Duracell. And your argument is simple. Duracell, oh, Baba, 90 rupees. No, every day, 15 rupees. Why? We are very much price sensitive. Okay, price sensitive. So that's the reason. We expected that over a period of time, competition will increase. And the companies which will provide the complete benefit, they'll absorb the consumers. Those who do not provide, they lose out on the consumers. That is the reason it was initially for a period of 2 years. Done? Okay. Anti-profiteering, right? So profiteering simply means the government has reduced the taxes. You do not transfer the complete benefit, thereby increasing your profits. This is called as profiteering. And to address this, government has introduced anti-profiteering measure, that is National Anti-Profiteering Authority. Define compliance burden. Already it is defined, right? I've defined. Again, you're asking me to define. It is an expenditure which manufacturers will incur because of government policies. Service tax can't be claimed. Service tax can't be claimed under ITC. Under VAT system, it was not available. Why? I'll tell you. VAT is given by the state governments. Service tax comes under the central government. Income tax returns means you will pay income taxes to government and you will also give documents to the government. Sir, why? Because government needs to understand whether the taxes that you have paid are correct or not. Imagine you're the prime minister, right? Before giving a break, one small joke here, okay? Imagine you're the prime minister. I will come to you and I'll give you, let's say, 10,000 rupees and I say this is my income tax for 1 year. Now, how will you understand whether the 10,000 rupee income tax is the right amount of income tax or no? Have you understand this? Any way for you to find out that 10,000 rupees is the right amount of income tax? No, that is very difficult. So what we do is, whenever we give the income taxes to the government, we will also give certain documents to government to prove that whatever taxes we have paid, it is the right amount of taxes. And government, that is the tax department, will go through the documents and then they will say, okay, Baba, this is the right amount, and leave it. Otherwise, if they find that you have not reported certain income, they will send a notice to you. You have not reported some of the other incomes that you have earned in another company, they will send a notice to you. That is why the income tax returns, ITRs, are important. Okay, let's take a break now. Let's take a break, right? 8:15. I'll start at 8:15. I'll restart at 8:15. Okay, welcome back. Am I audible to you people? Done. Let's start. Okay, Mrutyunjay, right? And again, not just Mrutyunjay, others will also have this particular doubt. The doubt is that, sir, when you're discussing these topics, can you tell us what is important for prelims and what is for mains? I've answered this particular question in the very beginning of my classes, very beginning of my classes only. As far as I'm concerned, if you're approaching economy as a subject where you can divide everything into prelims and mains, that would be a wrong approach. That would be a wrong approach. Yes, I will tell you, there are certain chapters which you require only for mains. For example, there's a chapter inclusive growth. That will be the last chapter that I'll discuss on the last day. So there's a chapter called as inclusive growth. Check the last 5 or 7 years question papers, you will realize that there is no question on inclusive growth in the prelims. Why? You'll understand when you study inclusive growth. But there's also chapters such as taxation, where questions have come in the both prelims as well as mains. Banking, where mainly in the last 5 years questions have come in the prelims, no question have come in the mains. But that doesn't mean, I have to understand, that doesn't mean that UPSC this year or let's say next year cannot pick up a question on mains from banking sector. I have to understand this. That doesn't mean that UPSC cannot pick up those particular mains based questions from the banking chapter. They can very well do that. They can very well do that. Sir, how do you say they can very well do that? I will just give a small homework. Please don't start studying it. Small homework. Just check in the last 1.5 months, has there been a concept of FSIB in the newspaper? If you're reading, you will know the answer to this. Just check, there has been a discussion of a concept of FSIB in the newspaper. Not so much in Hindu, but you cannot tell UPSC, right, I read Hindu, ask from there only. This is not a university exam, right? Forget about it. Yes, there is idea of FSIB which is there in the newspaper and this is related to banking. Now, is there anything for UPSC stopping, not asking a question on FSIB in the mains? They can ask you that. That's the reason this is my sincere advice to you people. Now, don't start running behind FSIB. We'll take it up when I take up banking. Don't worry. Right, so that is my sincere advice to you people. Do not try to divide everything into prelims and mains and based on that, prepare UPSC, especially economics. That, as far as I'm concerned, is a wrong approach. Then, let me go to the next concept here. Next concept, right? Certain important terminologies which can be asked in UPSC and they have been asked earlier also. First one is the idea of the tax buoyancy, and I'll club 2 terms here, then we'll discuss tax to GDP ratio. Tax buoyancy and tax to GDP ratio. Now, let me start with a very simple example. Don't calculate, UPSC will not ask you calculations here. Right? The idea is, imagine for a country, right? Let's say there is a country, the tax collected in the year 2022, the amount of tax collected in 2022, I'll just throw an arbitrary number, let's say 200 crore rupees. So when you say tax here, is it goods and services tax? Is it a direct tax or indirect tax? Complete, all of them. It is 200 crore. And the GDP of this country, the GDP of this particular country is, let's say, 800 crore rupees. 800 crore rupees. Now, if I simply say tax to GDP ratio, by the way, that is one of the formulas here. Tax to GDP ratio, what I do, how much is the taxes collected in 1 year and what was the GDP number in that year? For this year, what is the tax revenue collected? 200 crore rupees. What is the GDP of this year? 800 crore rupees. So 0000 cancelled, 2 1s are 2 4s are into 100, 4 1s are 4 25s are. So tax to GDP ratio is how much? 25%. I repeat, tax to GDP ratio is how much? 25%. Now let me check, okay, how much analysis or how analytical are you? Answer this. Should the tax to GDP ratio of a country increase or decrease? Let me check. Should a tax to GDP ratio of a country, should it be increasing or should it be decreasing? Decrease. Now this is one question to those people who are answering decrease. Why? Why do you think the tax to GDP ratio of a country should decrease? Answer, let me see, right? Are you providing answer? I'll answer it. First you try, no. Right? In UPSC, I'll not be there beside you to answer everything. Let me check. Okay, sir, sure, because GDP should increase, right? So GDP should increase. Okay, agreed. You want the GDP to increase. Now tell me next point. You will arrive at answer now. Wait. If GDP increases, will the tax collection increase or decrease? Let me see. If the GDP increases, what will happen to your tax and revenue collection? Right, let me see. Imagine you're the Prime Minister. GDP of country increases. You want to collect the same amount of taxes that you collected 10 years ago. Why does that make sense to you? It should not make any sense. Please understand this. Right, I'll answer it because 2 people answered. Rather than asking us, you answer it. Okay, Baba, I'll answer it. The tax to GDP ratio should be increasing. The tax to GDP ratio should be increasing, should be higher, by the way. Sir, why? Give me the logic. I will explain it. Follow this carefully. Whenever the GDP of the country increases, you remember the virtuous cycle. The incomes earned by the people increases. The consumption increases, etc. Now tell me, if income earned by the people increases, will the income tax increase? That is a collection. Will it increase? Yes. If your consumption increases, will the GST revenue collection by the government increase? Yes. So that is the reason there is a very close linkage between the GDP as well as the tax revenues. Do not say that the tax revenue should remain constant and the GDP should increase. It doesn't make any sense. It simply means you are not collecting the right amount of taxes. So argument is simple here. With the rise in the GDP, the tax collection should also increase. And that is the precise reason we simply say that the tax to GDP ratio should keep on increasing, should be higher. What is the tax to GDP ratio of India? The tax to GDP ratio of India generally is around 17%. The tax to GDP ratio of India is generally around 17%. Is it higher? Absolutely no. I'll tell you a reason. OECD Economics, Organization for Economic Cooperation and Development. I'm expanding, by the way. Right? You'll ask OECD expand. Organization for Economic Cooperation and Development. OECD countries have a tax to GDP ratio of somewhere around 35%. India has a very low tax to GDP ratio. Now you'll ask me, sir, why there is a low tax to GDP ratio? It is not because of the GDP, right? It is not because of the GDP. It is because of the tax receipts. Why people in India, companies in India avoid taxes, evade taxes? I have to understand this, right? People in India and companies in India avoid and evade taxes. Is it the only reason? No. Government of India also has a lot of tax expenditure. I'll explain that also. Just give me a minute. This term is there, by the way, in the PPT. I'll explain this. Government of India also has a lot of tax expenditure. I'll explain it. Wait. So because of this, the tax to GDP ratio somewhere generally comes at around 17%. We need to increase it to 22%, 23% like this. Why? As per one of the reports that was published by NITI Aayog, based on various analysis, NITI Aayog says that ideally the tax to GDP ratio of India should be around 22 to 23%. Done? Right. So this is one tax to GDP ratio. Now there is one more tax buoyancy. Right. What is this idea for tax buoyancy? Let me continue with the same example. Focus here. Leave rest of the calculations now. Focus only on this table now. Focus only on this table. What is it? I'll explain. In 2022, tax collection is 200 crore and GDP is 800 crore. Let's say in 2023, tax collection increases to 220 crore rupees and the GDP increases to, let's say, 880 crore rupees. GDP has increased, tax collection has increased. Now start answering. What is the percentage increase in the tax collection? I'll repeat the statement, right? Rather than, okay, let me change the number. Let me change the number because you'll get 10% in both the cases. Let me change the number so that you'll have something to calculate. Right now you will have to do some calculation. What is the rise or increase in the tax revenue collection? Adarsh, please check your calculation, Baba. Please check your calculation. Some of you, Deepak, right? I'm concerned now. Right? 5%, 10%. On 200, there is an increase of 20 crore rupees. It should not be very difficult. Somebody says 26%. Great. I will answer it. Leave it. But I would recommend you people to work on your C side. Simple, right? I would recommend you people to work on your C side. How much is the increase in the tax revenue collection? 10%. How much is the increase in the GDP? What is the GDP growth rate? It is 5%. It is 5%. So understand this. Whenever you say tax buoyancy, TB is a tax buoyancy. By the way, I'll write it here also so that later when you get the PPT, you will not get confused. Tax buoyancy is nothing but TB. TB is nothing but the comparison of the growth rate in the tax collection to growth rate of GDP. I repeat the statement here. It is a comparison between the growth rate of tax revenue collection to GDP growth rate. Don't say, sir, both are one and the same. Both are not one and the same. In the tax to GDP ratio, I'm simply calculating tax divided by GDP. In tax buoyancy, I'm calculating as a result of the GDP growth rate. I hope you understand this. As a result of GDP growth rate, how much is the growth in the tax revenue collection? Now, don't you think if there is a growth in the economy, taxes should also increase? It should make perfect sense to you. Whenever there is a growth rate in the GDP, there should be an increase in the taxes collection also. So I'm simply measuring how much is, I'm writing a formula here by the way, how much is the change in the tax revenue collection divided by the change in the GDP. And in this case, it is how much? The tax buoyancy in case of this is 2. The tax buoyancy is 2. Right? Why do we need to calculate tax buoyancy? Tax buoyancy simply gives a relationship between how much will be the change in the taxes collected to the changes in the GDP increase. And there's a close linkage between both of them. There is a close linkage between both of them. If the GDP changes, the taxes should also change. The measurement of that is called as tax buoyancy. Done? Okay. Right. So understand the second one here. One is the tax buoyancy. Right. The second one is, the first one is tax to GDP ratio. What is the tax elasticity? Let me explain it. What is the tax elasticity? Follow this carefully. Imagine you are looking at a country. You're looking at a country, right? Rather than writing 100, let's say country A. So understand this carefully. Don't get confused. You look at country A. This country experiences a higher GDP growth rate, as a result of which the taxes collected will also increase. Have you understand this? Right? You see a country where the GDP growth rate has happened, and as a result of this, the taxes collection also has increased. What does it mean? This is nothing but tax buoyancy. This is nothing but tax buoyancy. And by the way, it should be self-explanatory, but even then you're asking, I'll answer it. Should the tax buoyancy be higher or lower? Let me ask you people. I'll answer to other people who are asking. Others, let me see. Should the tax buoyancy be higher or lower? Thanks a lot. Right? Some of you are answering wrongly. Tax buoyancy should be higher, Baba. Tax buoyancy should be higher. Why? With the growth rate in the GDP, you want to collect more taxes or less taxes? And how difficult is it to analyze these things? Let me check. With a higher growth rate, you want to collect more taxes or less taxes? Answer is more. If you're collecting more and more taxes, what will be the growth rate in the tax revenue collection? More. So when you divide it by GDP, should the tax buoyancy be higher or lower? It should be higher, by the way. I understand this. It should be higher. Okay. Now, right, look at this. And again, right, tax buoyancy should be higher. It should increase. That is good for the economy, which means you are collecting more and more tax revenues. Now, some of you will say, sir, in that case, what if this is happening? The tax revenues are increasing, GDP is decreasing. What if this happens? Think of it. Think rationally also. If GDP keeps on decreasing, do you think taxes collected will keep on increasing? I have to understand. Think rationally always. Right? India experienced a recession. Do you think government of India collected highest ever taxes during recession? How is that possible, Baba? How is that possible? So think rationally whenever you ask these kind of questions. You will know the answer. And I can answer to you people. I can easily answer it. But why do you think I keep on asking you people? So that you will develop this thinking ability. Right? Because, right, check your books. Check your books. They will generally don't infer. They don't give you the inference. They don't say that TB should keep on increasing. It is good for the economy. But UPSC will ask you this. UPSC will ask you to analyze it. Right? So you need to develop this particular analytical thinking. That is the only reason I ask. Otherwise, there is no point. Okay. So same country. I'll give you another example. The taxes collection has increased. Right? Don't say both are one and the same. Follow this carefully. In the second situation, tax collection has increased because the tax rates have been increased by the government. Understand this carefully. In the second situation, the taxes collected have increased because the tax rates have been increased by the government. So how is that possible? Imagine the GST rate is increased by the government. Will the tax revenue increase? Of course, yes. So argument is simple here. In situation 1, the taxes collected have increased, but because of GDP growth rate, you have not changed the rate, but because of expansion in the GDP, tax revenue collection has increased. In the second situation, the taxes have increased, but because of higher tax rates. This is, right, remember this is called as tax elasticity. This is referred to as tax elasticity, and this is referred to as tax buoyancy. Have you understand the differences here? Tax elasticity simply means what is the change in the tax revenue collection because of change in the tax rate. And tax buoyancy simply means what is the change in the tax revenue collection because of change in the GDP. Both are different, don't get confused. So let me go back to the original slide here. Tax buoyancy, tax elasticity, tax to GDP ratio. Now, is it okay if I say, let me check your analytical skills now. Let me check. If the tax buoyancy increases, tax to GDP ratio also increases. Right, let me check. If the tax buoyancy increases, or if the tax buoyancy is, let's say, more than 1, let's say 2, 3, like this. If the tax buoyancy is a 2, 3, 4 like this, tax to GDP ratio also increases. Of course, yes. Of course, yes. Right, so that is a connection. Remember this, they can ask you like this also. And finally, one more term here, tax expenditure. Right, the tax expenditure. Right, what do you mean by tax expenditure here? Follow this very carefully. It is the tax revenue which is foregone by the government Because government is giving certain exemptions or rebates. That is the definition. I'll repeat the statement here. What is the tax expenditure? Tax expenditure simply means it is the revenue foregone. Foregone means revenue loss for the government. Again, don't take the literal meaning also. I'll give an example. Please wait. It is the revenue lost by the government because the government is giving certain exemptions, rebates, etc. So what do you mean by this? Let me explain. Now, there is a policy of the government of India, Startup India. Don't worry about Startup India today. I'll discuss this when I take up industrial policy. There's a separate chapter called as industrial policy. We'll discuss that later. Please don't worry. There's this idea of a Startup India. Under the Startup India, there is one provision which says government of India says to the startups that for 3 years, I will give you tax exemption. Understand this very carefully. For 3 years, I will provide you tax exemption. What do you mean by tax exemption? Let's take a very simple example. Imagine there is a company A. This is not a startup. It has earned 100 crore rupees of profit. There is also company B which has earned a profit of 100 crore rupees. But the difference between A and B is A is not a startup, B is a startup. And now look at this. Government tells you, imagine you're the owner of the startup. Government tells you, if you are recognized as a startup, in 3 years, you do not have to pay any taxes. On the profits that you have earned, you don't have to pay any taxes. Now, before you jump to a conclusion, then the policy is wrong. Mind the objective of the policy. The policy's objective is to promote startups in India. Rather than looking at only the taxes, look at other advantages also. So what do you mean by that? Startups create a lot of employment. Startups setting up means investment is increasing, etc. Now, don't run behind the startups. Stick to this as of now. I can see your comments. Don't start running behind the startup. You'll miss the concept here. So what government of India said? I will give you a tax exemption. Meaning what? Let's start. If there was no policy of Startup India, I repeat, if there was no policy of Startup India, what would happen is 22% of 100 crore is 22 crore here, and 22% of another 100 crore is another 22 crore here. So how much has government of India collected here? Again, I'll repeat it. Imagine there is no Startup India. How much is government of India collecting in the form of taxes? 44 crore rupees. Second situation, there is a Startup India policy. This 22% will not be collected. Now how much government of India will collect? Now in this economy, how much government of India will collect? Only 22 crore. So because of a policy of the government, I'll repeat it. Because of policy of the government, can I now say that government of India has lost a revenue of 22 crores? Let me know if there's a problem here. Because of the policy of the government, government has lost a revenue of 22 crore rupees. Again, when I say lost, do not imagine they were taking it in a briefcase and they forgot it somewhere. I'm not talking about it. They should have collected this, but because of the Startup India policy, now they will not be able to collect it. This is called as tax expenditure. This is called as tax expenditure. I hope it is pretty clear for you people. Tax expenditure simply means what? The amount of tax revenues which are foregone by the government because of government policies itself. Right? It is not evasion. It is not avoidance. Right? It is a policy of the government as a result of which you will not be able to collect these particular taxes. That is called as a tax expenditure. Done? Right? So this is basically some of the very important concepts related to GDP. Please, the taxation. Please be very careful. Now, what are the issues, overall issues in the taxation structure? We have discussed it. Let me put it in a nutshell here. First one, lot of taxpayers avoid and evade taxes. Okay, lot of taxpayers. It could be a company, individual, etc. They avoid as well as evade taxes. So what is the problem? The tax revenues collected by the government are lower. Don't you think that's a problem? Of course, yes. Lot of economy, or most of the economy is not covered under taxation. There are certain terms here. Please don't worry about it. We'll discuss it later. Right? The idea of informal economy, unorganized, etc. Let me not get you confused here. Let's understand with a simple example. After the class is over, right, again, some of you will go out and purchase the food from, let's say, a street side vendor. There is a roadside seller. You'll go purchase, let's say, breakfast. What breakfast left to you? Don't worry. Now, the problem is simply this. These people who are producing the good or service, selling them, generating income, these are not registered with the government. Done? These are not registered with the government. And when these are not registered with the government, do you think government will be able to collect taxes from them? Have you understand? If these are not registered with the government, how can government collect taxes? You're not registered. You're not telling how much revenues you are generating. Somebody will say, sir, look at their bank account. How many of you, when you have gone to eat samosa, chole kulche, etc., have paid in cash? I'm sorry, how many of you paid in check? How many of you have actually swiped? Or how many of you paid in cash? Most of the transactions, right? Most of the transactions happen in cash. So very difficult to identify. So because part of the economy, which is a substantial part by the way, is not registered like this, government will not be able to collect taxes from them. Government provides a tax exemption also. That is a tax expenditure by the way. Have you understand? I'm talking about tax expenditure. Government provides a lot of tax exemptions. As a result of this, the revenues of the government will also come down. And finally, there are certain issues related to GST. So what issues? Earlier, before the break, we have discussed. There are issues related to GST. As somebody says, sir, everybody uses UPI now. My dear, everybody might be using UPI. But do you think everybody will pay in the form of UPI only? Most of us even today use cash for making transactions. Have you understand this? Most of us. And even today we use cash only. So that's the reason. Okay, let's go to the reforms now. What kind of reforms have been implemented by government to address the taxation issues? One very important reform, by the way, GST is also a reform. Have you understand? GST is a reform. MAT is a reform. GAR is a reform. The base erosion and profit shifting is a reform. The global minimum corporate tax is a reform. Don't say, sir, under reform only one. Earlier also we have discussed them. Let's start. Government of India in 2020 introduced a new system by the name of honoring the honest. Transparent taxation, honoring the honest. So what do you mean by transparent taxation, honoring the honest? Let me explain this. Under this particular system of honoring the honest, government says we want the system to become very transparent. We want to make the process much more speedier. We do not want to harass the taxpayers, etc. With these objectives, government of India has implemented transparent taxation, honoring the honest system. Now, what happens under this? Follow this very carefully. There are three very important parts to this system, or three pillars. One is a faceless assessment. Second one is a faceless appeal. And the third one is a taxpayer charter. Now, what is the taxpayer charter? Is just a document. We'll go to that. Let me start with faceless assessment. Let me start with the concept of faceless assessment. Right? What do you mean by faceless assessment? Let me explain it to you. Let me take a very simple example. Right? Imagine I'm a businessman. You are the commercial tax officer, or let's say you are a tax inspector. Now, what I'll do is I'll come to you and I'll simply say, right, these are my tax returns. That is, I'm going to pay, let's say, 2 lakh rupees, and these are the documents to prove my income. But please take, let's say, 2 lakh rupees like this, 10 lakh rupees like this. Don't check my documents. Simply approve the documents. Simply approve, saying that whatever taxes I've paid are correct. Now tell me, is it a possibility? That's a simple question. Is it a possibility? Well, right, again, right, some of you are saying no. Again, is it a possibility? I'm not saying you will do that. I'm simply asking you, is it a possibility? And can I ask you a simple question? Don't you think there's a corruption in the government system? You know the answer, by the way. Right? Don't you think there's a corruption in the government system? How many of you believe we live in an era where every government official is very, very honest? Every government official. Right? And again, I'm not saying that every government official is corrupt, by the way. Before you jump and start accusing me of something, I'm not saying everybody is correct. And I'm not saying, right, you cannot believe that there is no corruption also. So argument is simple here. Argument is simple. If this happens, let's assume this happens. Don't you think government will be losing the tax revenues? Right? I'll repeat the statement. If this happens, don't you think government will be losing tax revenues? Of course, yes. And there is no transparency also. There is no transparency in the system. So what Government of India has done is, they have introduced a new system called as faceless assessment. Under the faceless assessment, this is what will happen. Follow this. UPSC will not ask you the process, but the concept is important. Why it is called as a faceless assessment? Now imagine you will go in the sense, not literally to the income tax office, you can do it online. You will submit the documents and you will pay a tax of, let's say, 2 lakh rupees. You'll submit all the documents, that is income tax returns, and you will pay an income tax of 2 lakh rupees. Now the tax official who is sitting, who has to look at all the documents to determine whether the 2 lakh rupee tax is correct or you're supposed to pay more, earlier or until now, could simply find out your identity. You have to understand this, right? They can simply identify whose the documents these are. And imagine, right? Imagine you are the tax official, your father's, your parents' document will come. Right? Don't you think you'll become more relaxed? Or my document will come to you. I've given a lot of money to you. You will not even search the documents very properly. You'll simply approve the documents. It will be cleared. Now, what the government simply says is, no, we will not do this anymore. What we will do is, imagine these are your documents. Now, these are documents, rather than directly going to the tax official, what will happen is simply this. All these documents, that is IT returns, will go to a centralized system. It will go to a centralized system. Right? And the centralized system is nothing but National Faceless Assessment Center. Now, once they go to the National Faceless Assessment Center, imagine a document is a digital copy. They will mask, they will hide your identity. Whatever identity is there, your PAN number, your name, your address, your phone number, email ID, everything will be masked. Masked means that is not visible to the tax official. Now, these documents which are masked, the identity is hidden, will be given to tax official. Now, these documents are given to tax official. Now, tell me, which system is better? System 1 or system 2? You know the answer, by the way. Is the system 1 better or system 2 better? System 2 is better. Why? It will promote a transparency. The tax official doesn't know, so he has to evaluate everything promptly. There is no scope of corruption here. Right? So transparency will increase. Right? The scope of corruption will be addressed. All of these are advantages. This is called as faceless assessment. This is referred to as faceless assessment. What if there is a corruption in NFSA? You want to do corruption everywhere. Right? So at least let's assume that doesn't happen. Right? At least let's assume that will not happen. Right? Why do you want to increase corruption everywhere? So argument of the government is, because understand this, why this is called as a faceless? Because the tax official will not come to know your identity. Right? This is called as a faceless. This is referred to as faceless assessment. Now, what is this idea of a faceless appeal? Right? What is the concept of faceless appeal? Let's say, right, I'll continue the same example. Let's say you submitted documents, you have paid a tax of 2 lakh rupees. Now the tax official will assess your document, check your document, and come to a conclusion. No, you're not supposed to pay 2 lakh. Rather, you're supposed to pay 2.5 lakh rupees as income taxes. Is it okay? You're not supposed to pay 2 lakh. You're supposed to pay 2.5 lakh rupees in the form of income taxes. So what they will do? They will basically revert back to one more authority, which is called as National Faceless Appeals Center. National Faceless Appeals Center. They will send an email to you. They will send a message to your registered mobile number saying that there is a tax notice. Please check it. And if you have filed your income taxes in recent times, which I believe some of you have done, or let's say all of you have done, all of you are very honest, you have done it. You must have seen this. There is a new online system. There is a new online system connected to your Aadhaar data itself, where you'll have to submit all the data. OTP will come to you, and you'll have to enter the OTP. Then the assessment will be done, etc. How many of you have done your IT returns filing? How many of you have done your ITR returns filing? Anybody who has done it? Right? They will basically understand what I'm talking. Those who have done, right, you will know this. Right? It is an online system now. Simple online system. You'll have to file all the documents there. If there's a tax notice, it will come there only. Yeah, the IT return certificate will come there only. Right? Whenever you file, they will allow you to download the attachment, etc. Now have a look at this. Have a look at this. The tax official determined that you have paid 2 lakh, but actually it's 2.5 lakh. So what they'll do? They will send a notice to you. Right? And now you don't have to go to office. Right? You don't have to go to IT office to clarify it. You can simply sit at your home and ask for them to have a meeting. You can simply have a meeting. Deliberations, consultations can be done to clarify this, whether you're supposed to pay 2 or 2.5. This new system is called as faceless appeal. Why this is a better system? Earlier, they would send a notice. Physical copy would be sent to you. You will take the physical copy, go to the income tax office, and you know how government bureaucrats are with the people. Right? How cordial they are, how friendly they are, how less intimidating they are to the people, and how quickly they will do your work. So Government of India now says, don't worry, you don't have to follow all of this. You can simply sit at the comfort of your home, ask for a meeting, and you can do it online itself. This is called as a faceless appeal. Faceless appeal. And finally, taxpayer charter. Final concept is taxpayer charter. Taxpayer charter, right, sir, what do you mean by charter? It is basically a document. Right? Don't be worried about it. It is basically a document. But what is there in the document? Government of India says, in this particular document, we will give certain directions to the tax department, and we also want the people to do some things. Have you understand this? We will give certain directions to the tax department, and we will also give certain advice to people. What kind of advice to people? Whenever you're filing income taxes, you have invested somewhere. Keep all the documents with you. If you're filing taxes, be honest. Right? These are some of the advices that they're giving to the people. What about the government officials, the tax officials? Government is telling them, be transparent with the people. Don't treat people right in a callous way. Treat them very humbly. Don't terrorize them. Right? Be friendly to them. And when they approach you, do not treat them as culprits. Do not treat it as if they have already taken away or hidden some income taxes from you. Right? These are some of the advices which have been given, or these are some of the directions which have been given to the tax department as well as to the taxpayers. Just a document. Just a document. Right? So this is referred as a taxpayer charter. Now, last concept under taxation. Last concept, idea of a Laffer curve. Concept of Laffer curve. Now, this is the representation of the Laffer curve. So, what do you mean by the Laffer curve? It provides the relation between the tax revenues of the government and the tax rates. This is the definition, by the way. It provides the relation between tax revenues of the government and tax rates. Now, how the Laffer curve is represented? Understand this very carefully. Laffer curve says, whenever you increase the tax rates, the tax revenues will increase. I'll repeat the statement here. Whenever you increase the tax rates, the tax revenues will increase. But if you keep on increasing for a longer duration, in a long term, whenever you keep on increasing the tax rate, you will not see that the tax revenues will always increase. You will not see that. After a certain time, what will happen is the tax revenues will start decreasing. I'll repeat it again. Follow this carefully. I'll explain why it happens. And there are loopholes in this also. Problems with this also. I'll tell you later. What does the Laffer curve say? Laffer curve simply says, in an economy, whenever the government will increase the tax rate, the tax revenue will increase. But does it happen always? No. In a long term, when you increase the tax rate like this, in a long term, rather than increasing, the tax revenues will start falling. Why? Why does it happen? Let me explain. Imagine your tax rate is 0%. I expect an answer from you now. Imagine the tax rate in an economy is 0%. If I increase the tax rate to 5%, start answering, will the amount of tax revenue collected by the government increase or decrease? Right, I understand. If your tax rate is 0%, you increase the tax rate to 5%. Will the government tax revenues increase or decrease? Thanks. Right, I'm very happy with you people. Sir, of course, yes, it increases. So have a look at this. Imagine this is 5%. How much is the tax revenue collected? Right, this is the amount of tax revenue collected. You'll further increase it to, let's say, 10%. Will the tax revenues further increase? Yes, of course, yes. It should make sense to you. But what Mr. Arthur Laffer is the author here. Name of economist. Arthur Laffer. What Mr. Arthur Laffer says is, if you keep on doing this, you expect that from 10 to 20%, taxes should increase. From 20 to 25%, tax collection should increase. This is what you expect as a government. What Mr. Arthur Laffer stated was, in a longer term, if you keep on doing this, imagine you will increase it to further 20%. What is the tax revenue collection? Highest. The tax revenue collection is highest. Now, in order to collect more revenues, what you will do is increase it from 20% to, let's say, 45%. In order to collect more tax revenues, you will increase it from 20 to 45%. What he says now is, rather than increasing, the tax revenues will come down. Rather than increasing, the tax revenue will come down. Why? I'll explain this. Wait. First point, be very careful. In the Laffer curve, which was originally there, I remember originally what was there in the slide, was there any number along x-axis? Let me check. When I started the discussion, was there any number written on the x-axis? No. Now the numbers are written by me. Right? So what is the point here? Mr. Arthur Laffer, when he gave this particular concept, did not say what is the exact tax rate he's talking about. Have you understand this? There was no mention of what is the exact tax rate. Why? As per the analysis that we are doing now. Have you understand this? As per analysis that we are doing now, the tax revenue collection is the highest at 20%. And after 20%, if you further increase, the tax revenues will decrease. The author has not given this number. That is the biggest problem with this theory. The author, when they proposed it, they have not given what is this exact rate they're talking of. Where your tax revenues will be highest. They have not given, or the author has not given it. Have you understand this? Right? Because I know, I get this question every class, every batch. Sir, if this rate, the tax revenue collection is higher, then what is this rate for India? You will never know that. Why? There is no mechanism to find it out. Have you understand? There is no mechanism to find it out. That's the first point. Remember this carefully. Second very important point. Why does it happen? Right? Why does it happen? Reason is simple. As the rates increase, it is very natural for the government to collect revenues more. But when you cross, assume this, it is wrong. I know that. You also remember it. There is no fixed number. Is it 20%? You never know. I'll tell you why. Just give me some time. Is it 30%? You will never know. Is it 45%? You will never know. So imagine 20%. Imagine 20%. I'll call this 20% as optimal tax rate. I will call this as optimal tax rate. What do you mean optimal tax rate? It is the rate at which you are collecting the highest amount of tax revenues. And if you further increase it, your revenues will fall down. That is optimal tax rate. Now the argument given by author was, when you increase beyond the optimal tax rate, people will feel the burden of tax. I repeat, right? I'm explaining the same thing. Follow, I'm explaining the same thing. Right? Two people are asking why it falls down. I'm explaining that. Whenever you increase beyond the optimal tax rate, people will feel the burden of tax. And because people feel the burden of tax, what they will do is, they'll start replacing work with leisure. They'll start replacing work with leisure. What do you mean by this? Rather than working more, you'll take more holidays. Why? Why are you taking more holidays? The economist says, because you're feeling the burden of tax. You are saying, anyways, if I work more, I'll have to pay more taxes to government. So what is the point in working more? Let me work less. And when you work less, what is your income? Will it increase or decrease? It will come down. And when your income comes down, what will happen to the amount of tax revenue collected by the government? Amount of tax revenue collection will also come down. This is the explanation given by the economist. The one who has proposed it, this is what the author says. But like I've already said, there are problems. There are problems to this. One, in real life, this is not how the system works. I have to understand this. In real life, this is not how the system works. One, you don't know what is the exact tax rate. Right? For example, you're the prime minister. Right? You've read about Laffer curve now. You want to do this in India. So that you want the optimal tax rate to be implemented, your revenues, you want it to be highest. But has the theory told you what is the optimal tax rate? How do you arrive at it? No, it has not told you that. Is there any formula for it? No, there is no formula for it. Right? That is one of the biggest drawbacks of this particular theory. And second theory is, let me start with a question to you people. Is it the only tax rate which will affect the government revenues, or is there anything else also? Have you understand this? Have you understand my statement? Is it the only tax rate which will have an impact on the tax revenues of the government? No, there are so many factors. Imagine government of India might have a corporate tax rate of 40%, but if there's a pandemic, do you think government will collect higher tax revenues or lower? Lower tax revenues. So there are so many internal as well as external factors which will have an influence over the tax revenues, not just the tax rate. Right? So these are some of the problems related to the idea of a Laffer curve. Done? Okay. So this is the discussion related to taxation. Let's pick up the questions now. Start answering. Start answering. Okay, 28% have answered correctly. Why? Let's start. Any problem? Let me know, because most of answered it as option B. Which of the following is not a feature of a value-added tax? It is a multi-point destination-based system of taxation. Is it imposed at multiple points? First question: is it imposed at multiple points? Of course, yes. We have seen the discussion. I've given an example also. Is it a destination-based? Destination-based means what? The state where consumption happens, that state will collect it. Is it correct? Of course, yes. Right? We have discussed the features. Right? So A is correct statement. Correct statement. And the question says which is not a feature of VAT. Second, it is a tax levied on the value addition at each stage of transaction in the production distribution chain. Is it not what is value-added tax? The name itself is telling you what is value-added tax. Statement B is correct. It is a tax on the final consumption of goods and services and must ultimately be borne by the consumer. Of course, yes. Any indirect tax, it has to be paid by the consumer only. Whether you talk about GST, VAT, service tax, etc., consumer has to pay it. And finally, it is basically a subject of the central government. Did we say this? Or did I anywhere say that VAT is under the central government? I made it a point of saying that VAT was done by the states. VAT was introduced by the states. It is a subject of the central government, and state governments are basically implementing it. Facilitators. No, statement D is wrong. In fact, it is exactly opposite. It is a subject of the state, and it is central government which is facilitating implementation. Next question. So you told VAT is origin-based tax. Praveen, show me the context where I told you VAT is origin-based taxation. Tell me. Tell me where I said VAT is origin-based taxation. Right? You can tell me the slide number, you can tell me the picture, etc. I will go back. If I've told it, I'll correct it. I've never said VAT is origin-based taxation. I've always said CST is origin-based taxation. So you said, check Baba, check where I've told, check it and let me know. If I've done a mistake, I'll correct it. Right? I'm not that kind of a person. Okay. What is or are the most likely advantages of implementing goods and services tax? Many of you will complain that, sir, without a teaching statement 2, right? You have not told us anything regarding statement 2, but you have given a question. It is a practice for you. I'll discuss what is current account deficit later under international trade. I'll do that. But imagine UPSC will ask these kind of questions. Many of the times the hints are there in the question itself. You know the first statement is correct. Any problem, right? So yesterday you mistakenly said VAT is origin based. Arey Baba, how? Where did I say VAT is origin based? Just check the slides. Check the slides. I've written CST, Central Sales Tax is an origin based taxation. Check the slides. No, it should be there. There is a written proof now. Check the slides, you'll understand. Okay, it will replace multiple taxes collected by multiple authorities and will thus create a single market in India. You know first statement is true. You know first statement is true. You don't know second statement. At least look at the third statement. Now look at the third statement. It will enormously increase the growth and the size of the economy. It will enable it to overtake China. Do you think it will be correct? Let me ask you a very simple question. Do you think just because you have implemented, GST, China's GDP is 17 trillion, your GDP now is 3 trillion, right? Not 5 years ago, now is 3 trillion. Just because of GST, your GDP will increase more than 5 times. Do you think it is rational? Because many of you start coming out, after coming out of the center, you start complaining. That faculty did not discuss. No books discussed it. Nobody has to discuss, Baba. It is a rational statement. Right? Apply rationality, you will understand. Right? So third statement is wrong. Eliminate. You'll have option A. Okay? Next. Okay, let's start. 42% have answered correctly. So this is the kind of analytical question. I understand. Factual questions also have been asked by UPSC, but this is the kind of analytical question. Now take my advice too, right? Take my advice. Try and solve as much analytical questions as possible. This is my sincere advice to you people. Analytical means what, sir? Where you require to think. Simple. Where thinking is required. The previous question was more of a tricky elimination based question. This is more of an analytical question. There also you can use elimination technique, but you need to think to come to an answer for this. Right? So anyways, let's start. A higher tax revenue can be collected by imposing higher tax on commodities which are habit forming. Tobacco, cigarette, alcohol. If government of India increases the taxes on alcohol, will government collect more revenues? Of course, yes. I'll prove it. During the pandemic, right? You must have read it, seen it, laughed at it, etc. People were queuing up in front of the liquor shops despite government increasing the rate. Despite the government is increasing this particular tax rate, people were queuing up to purchase the product. Even today, the demand for the liquor is higher, right? So which is a habit forming, which basically becomes a habit for you, right? Cigarettes, tobacco products, alcohol beverages, etc. Third one is correct. Which have highly inelastic demand. Sir, what do you mean by inelastic? If you ask me this, one of the two things. You have joined after the second class or you have not revised the second class. If you have joined after the second class, please don't worry. These will be revised, right? Once I take the next class, you can, or next session, next batch, you can join, get your classes there. But if you are of the second category who has not revised, that is a cause of concern for you people. Why? I'll tell you. Elasticity we have discussed. The concept of elasticity we have discussed already. What do you mean by inelastic demand? The price changes, demand doesn't change by much. I will repeat the statement. Price changes, demand doesn't change by much. Right? So any example for this? Salt, vegetables, etc. Right? So these are generally said to be having, or even for that matter, gold. For that matter, gold or petrol and diesel fuels. All these are said to be having inelastic demand itself. Done? Right? So understand the logic here. Price of the commodity, such as let's say salt, increases. Now follow this very carefully. Why the price has increased? Because government of India has increased, but because 15 kilometers regime. Now I would simply say, do not worry about second part of the statement here. Do not worry.